Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. And the Nifty, well, a tad bit sluggish if I can call it. Just about a tenth of a percent lower. We slipped a wee bit below the 25,100 mark. The Bank Nifty holding up though. So some bit of outperformance seen here as well as in broader markets. We'll zoom into that. But let's have a look at the heat map first. And in terms of the heat map, you're seeing some of the financials do okay in trade, 1% or so. But again, there's no material mover in terms of at least in the green where the Nifty is concerned. A predominant number of names sitting in the red, as you can see. And what you're seeing is also some buzz on Eternal, Ultratech. But again, no real big movers. On the downside, though, we're seeing some pressure on M&M. There's also a consumption name there, which is Asian Paints. And then there's Cipla and Dr. Reddy's. Both of those down about 1% or so. Eicher Motors has just launched a new bike. That's flashing on your screen. The stock continues to be down 1% or so in trade. So very muted kind of a screen that we're seeing. No major movers either side. But of course, the reds dominate the greens. And that's one of the reasons why we are seeing the move that we're seeing on the Nifty. Now let's talk about some of the sectors and let's pull those up. And again, not surprisingly, there aren't too many big movers either side. IT index is the top loser, 0.6. So is Pharma with some of those names that we spoke about. Auto also down about half. But what's really gaining traction is the realty index today. It's standing out 2.5% higher. Of course, among the large cap names, those names don't really feature there. But nonetheless, we'll probably see a hint of that in the broader market side of things. The Nifty small cap 250 is the other one which is gaining, and we'll see the advanced decline. It'll give us some color on that. The Nifty India Defense Index up around 1/3% thereabouts. That's the one which really stood out last week and continues to do okay on the back of that as well. So broadly, it's a very, very range-bound day of trade, even when I'm looking at the sectoral indices. No major movers except that realty index. Let's look at the advanced decline, and that'll also give us a sense as to how broader markets are doing. I did mention that 0.5% high on the Nifty small cap, and you can see why that is so. It's just the breadth in the broader market and looking much better than on the Nifty 50, right, Neeraj? And that's probably why you're seeing the kind of traction you're seeing in broader markets, Neeraj.
Yeah, I mean, not too many IT stocks which can be pulled down at the broader end of the spectrum by the Nifty IT 0.5% downtick, right? So that kind of plays out. Remember, we've had 8 straight days of gains or 7 straight days of gains. After that, a pause is actually welcome. You do not want the markets to really go berserk and keep on going every single day. So that is to be kept in mind. Okay, specific pockets of strength and weakness. On the JM Financial note, Aegis Logistics is up about 7%, 7.5% in fact in the session today. So really smart mover and on very high volumes. Speaking of volumes, by the way, Anant Raj, good volume activity in the session today for that stock. That whole data center benefits leading to 11% uptick on, look at those volumes, 22 million shares traded. Embassy up 7%. Vodafone is doing very well, and the railway linked pockets are doing very well. So Orcon, Railtel, I believe Titagarh, a lot of these stocks have actually, RVNL have had a really good move in the session today. So that's a bucket that seems to be doing rather well for themselves. JBM Auto is the second last one on my list. I would argue Piramal Enterprises, as Parag Thakkar recommended in the morning with the rationale, is also doing well because of that particular reason. 4.5% again valuations. On the flip side, the one stock which matters is KRBL, down about 9.65% because of the resignation that was given by a key independent director, and the reasons being given for the resignation certainly raises an eyebrow. Hemen Kapadia of DR Choksi Finserv with us on the show. Hemen, great having you. Thanks so much for taking the time out and being with us. Are you this slight lull in the session today? Is it to be kind of digested well, simply because we've had such a decent move in the last 6-7 days that a consolidation is welcome, maybe, Hemen?
A very good afternoon to Neeraj. Thank you for having me on the show. So it's a pleasure. Yes, I think at the beginning of the show you mentioned that we've had 1 week of a run up, we needed some consolidation. And yes, I think it's welcome. I mean, see, markets are still not completely out of the woods. Stocks, specific sectors are popping up like popcorn. But yes, overall, if you've had a run up like this, 600 points, I mean, a small cool off would do well. I totally agree with you. And if you notice on Friday, even the week on week open interest, as far as the Nifty and Bank Nifty, both we've seen some reduction. So I would take that as some amount of profit taking. And I believe on the last trading session of the week itself, Bank Nifty lost some 4.5-5% OI. So some profit booking, I think, was indicated on Friday itself. And yes, see the VIX is at 10. So with such a benign VIX, we don't expect a big fall. But like you said, makes it healthy. 25,002 is a was a resistance level. The next headache or resistance to overcome is 25,212. So we take support at 25,000. You have significant OI at 25,100, 25 and 24,900. So nothing much happening. But yes, I think it's a breather. It's a welcome breather, honestly, Neeraj.
Okay, and what about the Nifty Bank came in? Good afternoon. It's Harsh joining in.
Very good afternoon, Harsh. I think similar sentiments. We've seen reduction in open interest on Friday, 5% on the day itself. Overall, yes. 55,000 resistance. Yes, and if you go from 53,600 to 55,000, that's 1,400 points, Harsh. And we're running into a congestion area. So frankly speaking, maybe 500-700 points of a downside is not going to hurt someone. I think it's great. At least a short-term bottom is very clearly in place. Now, this needs to translate to positives on the weekly chart. I believe slowly we'll get there. But as of now, I think same logic. 54, 460, 54, 467 is my support level. That shouldn't break. I don't think it will. And sorry, just one more thing. As far as the Nifty is concerned, there are two bullish gaps. Normally, indexes have a tendency to cover them up. So maybe the first gets covered up tomorrow. So everything seems to suggest a small pull off.
Right, and Himin, your top picks for this afternoon?
Okay. Firstly, a buy call on 361. That looks good. We're on the verge of overcoming the 55-day exponential moving average. The oscillators have given a crossover buy after reflecting positive divergence. Possible double bottom information. Possible because we've not crossed the valley high yet. So long story short, one can buy 361 at 1076. A stop loss of 1051, target of 1126. Secondly, the slightly longer call, not a very trading sort of view, slightly positional. Sale, Steel Authority, anything metal, anything PSU, and anything, I believe, realty. If you have a 1 year's time, they're all making new highs. So I think you do any mini mo on the metal index, stop your finger, buy whatever you get. But sale is looking interesting. Buy at 132, stop loss 125, target 147. Beginning of a move, lot of headroom.
Himen, sorry. So couple of pieces there. Let me try and bring that more clearly to viewers. So is this purely PSU metals which is going to rally, or anything on the Nifty metal, any mini mo?
Anything on the PSU index, anything on the PSU bank index, anything on the PSU, anything on the metal index, anything on the realty index. All of these, I believe, in the next 15 months, maybe earlier, but 15 months, high probability all of these stocks are going to cross the last September highs or their all-time highs. Harsh.
And okay, Himen, you've given us so much today. So I'm going to push you to give a little bit more. Which among all of these are your favorite?
Okay, I won't talk about what I bought because that's not fair.
Sure.
But yeah, sale is good.
Okay.
I think Hindustan Zinc looks very interesting. Vedanta also. All of them have been consolidating, correcting. Not fair to compare, but sometime back, Maruti, the auto index was looking like breaking out. Maruti spent 17 months hatching eggs. Then it broke out. So many of these stocks have been consolidating, quality stocks. So I believe metal, these, and if you look at realty, I think you look at Lodha, you look at Prestige, everything looks great. Once again, not a very short-term point of view. There'll be a few ifs and buts, but longer-term point of view, they look phenomenal.
Okay. Himen, curious to ask you more, but I'll pause there because it's time for stock of the day. And we have Anant Raj as the stock of the day. Stock is perked up 12%. Neeraj did flag it. Anushi joins us with all of the details on this one. Anushi, give us the rationale.
Hi, thanks for that, Harsh. So strong gains that we are seeing for Anant Raj, and this is on the back of a big update that we are looking at. Now here, India has proposed a 20-year tax exemption for the data center developers that we are looking at. So this directly puts spotlight on Anant Raj, clearly clocking about the 12% of gains right now. So what has happened here is now this proposal includes, this India proposal includes 20-year exemption in terms of taxes on these data center developers are there, but this is contingent of a couple of criteria as well that we are looking at. This includes about incentives in terms of draft GST reforms in terms of input tax credit on assets as well, along with the cloud services as well. And this is, in contingent, with the companies meeting targets in terms of energy efficiency as well as capacity addition plans that they have. But in terms of Anant Raj data center capacity itself, we are seeing strong growth plans here for the next 10 years in particular. Currently, if you look at the operational capacity, that stood at 6 megawatt, which included about 0.5 megawatt coming from cloud capacity. This is one area that company wants to expand, and considering that it has about 23 to 25% of a margin profile here. But onto the additions power, 22 megawatt is additional, which is going to be on stream. This includes capacities coming from Manesar as well as Panchkula, which currently witness delays. So how that pans out over FY26 is something that we should be watching out for. This delay was caused particularly by pollution control regulations in the NCR. So that was the result of which with this, the delays happened. But on to what's going to happen from FY27 or FY28 onwards, current 6 megawatt of capacity, 10x is the kind of growth that we are looking at, 63 megawatt targeted by H2 of FY27. This is according to the MK note that we are looking at, while 107 megawatt would be on stream by FY28. In fact, if we just talk about FY33 goals as well, 307 megawatt is the kind of capacity that we are seeing for data centers, which MK expects that the company would achieve by FY33 to 35 period. So strong growth projections on that front that we are seeing. But how the company has done overall in terms of stock performance in 1 month, we've seen about an uptick in terms of 9%. Correct the error here. This is a 9% of an uptick that we've seen, while on a year-to-date basis and 1 year, the stock has seen strong correction, seeing about a 31% of a downtick in just this particular area itself. But in terms of how the analyst, how the street is covering this particular area, we are seeing about 5 buy calls on this, while 0 hold and sell calls that we are seeing, which implies an upside potential of roughly around 29%. So, currently Anant Raj in focus on the back of, the tax exemption rule for next 20 years that we are seeing.
Okay, thank you so much for that, Anushi. Anant Raj in focus and stock up 12%, market cap surging. Himen Kapade, how do you rationalize this on charts? And I know you're bullish realty. You said pick any real estate company on the Nifty Realty Index and it'll do well. Is this one of those, or the move today not giving you as much comfort on this one?
Well, yes and no, Harsh. 12% in 1 day, Rome wasn't built in a day, so I'd stay off. Having said that, the swing high was at 620. So what could happen is 600 and 622 levels. It could come here before it cools off. The setup is positive from a longer term point of view. Things are improving. We saw deep correction, Harsh, in the sense from a high of 948 to 376. It's become almost 1/3. So yes, and now it's on the verge of posting a higher top, higher bottom on the weekly chart. Looks good, but this mad run in 1 day, I'd wait for a small cool off.
Got it. Okay, up 11% or 12% or higher. Really strong. So, Himen, just one last question before we thank you. And that's on the railway companies and some serious moves today, right? Across the bucket. Now, my question is, for the likes wherein people have bought in, which Titagarh, Texmaco, etc., stuff like that, is there some upside cap to any of these?
Titagarh is going to break out at 970 for Neeraj. So we're on the cusp of a decent, if not a good move. We spent 1, 2, 3, 4, 5, 6.5 months consolidating. Cool off from 1900 to 655 became 1/3. I mean, I don't think you can lose much from the stock at this point in time. But yes, if you're looking for a significant slice of the cake, 974 weekly is important. We've turned 4 times from there, 1 to 4 times, Neeraj. So we need this closing. I believe we are on the way there. And after that, all bets are off. It looks good. It'll be off the charts. Looks fine, deep retracement, and things are now improving on technical parameters. Positive divergence, crossover buys, high top, high bottoms. It's ticking most of the boxes, Neeraj.
Got it. Hemant, thanks a lot for that. Really appreciate your time this Monday afternoon. All the best for the week ahead of good trading, hopefully, for you. And yep, that's Hemant Kapadia with his thoughts and his calls. Okay, it's been a busy week last week for the primary markets. Urban Company, Dev Accelerator, and the Mangalsutra Company, Shringar House of Mangalsutra. Very strong subscriptions. Now, we are going to see these companies list in about a week's time. So our research team has put together everything that you may need to know for these IPOs. Let's start off with Anushi and Jasmeet to talk about these, and we'll get in Vansh in a moment from now as well. But okay, in fact, Vansh is also with us. Okay, all three of you, thank you so much for joining in. Well, Anushi, let's start off with you and talk about your blockbuster subscription from your space.
Well, it's a strong subscription that we are looking at, and I'll talk about Dev Accelerated, which is in focus here. Now, overall subscription of around 64 times is what we are seeing. This is with QIB portion of around 20 times. With if you're looking at retail proportion, that's about 164 times of oversubscription that we are seeing. Now, if you are looking at the overall IPO size for this particular one, this is about 143 crore. It's a complete fresh issue that we are seeing. Now, just about what the company essentially does. Now, the company provides flexible office spaces. Now, in the recent months, we've seen a lot of these companies, coming out with their IPOs in this particular area that we are looking at. That's co-working solutions that we are seeing. The company expects to use this funds towards capex for fit outs as well as proposed centers. This is also, they are going to be also using 35 crore of funds for repayment of borrowings as well. In terms of how the financials have panned out, revenue from operations are looking at about 159 crore as compared to 108 crore last year. While consolidated BAT stood at about 1.8 crore as of FY25 end. Now, at the upper end of the price band, if we just take the valuation in consideration, that roughly stands at about 3.5 times the price to sale multiple that we are looking at. So, this is the overall picture that we are seeing, the multiple implying a market cap of around 550 crore as well for Dev Accelerator.
Okay, interesting, Anushi. Jasmeet, which one are you tracking?
Well, the one on my list is Urban Company. Let's quickly understand the overall subscription. What does the company do? Well, the overall subscription stands at 109 times. I mean, look at the QIB, they're at 147, and the retail are at 41 times, while the employees are at 43 odd times. Now, while the company operates in the digital market space, they provide home-to-home beauty services, and it's a tech-based IPO, we can say, where they want to expand. Now, if you look at the use of the fund, the total size of the IPO is 1900 odd crores, out of which OFS is 1400 odd crores, just going back to the older investors, and the actual fresh issue stands at 472 crores. Now, with this 472 crores, management plans on investing roughly 190 odd crores to develop the tech and the cloud infra. Well, that's something to watch out for. The rest 75 crore will go to lease payments, and the balance of 90 crores will be used towards the expenditure of marketing for the company going forward. While lastly, the financials, that's something interesting to watch out. If you look at the revenue, it has nearly doubled in last 3 years. FY23 revenue stands at 630 odd crores, but the previous year FY25 revenue stands at 1144 odd crores. While even the profit from net loss of rupees 312 crores to a net profit of 240 crores, that's what company has performed as per FY25. Now, if you look at the upper band, it starts at 103 rupees, and this IPO, the bid received for this IPO is 1.13 lakh times compared to the size of just 900 odd crores.
Got it. Okay. Well, but very strong subscription for sure. But well, if it may not be 108, but 160 times or thereabouts for Shringar House of Mangalsutra is nothing to scoff at. Tell us a bit about it.
Well, yes, so let me start off with the subscription details. As you rightly mentioned, the subscription has been 60 times. Now, if we talk about the details, the QIB portion has been filled 101 times. We have seen retail portion of subscribing 27 times and employee subscribing 69 times. Now, if I talk about the IPO size, now the IPO size, the issue size is about 400 odd crores, and the entire issue is fresh issue. which means there is no offer for sale. If I talk about the details of the company, now the company is manufactures and designs Mangal Sutra in India. And if I talk about the use of the funds, now the funds would be used for the working capital requirements of for about 280 odd crores, and the rest of the funds would be used for towards the general corporate purposes for the company. Also, if we talk about the financials, what we have seen is the EBITDA that has grown from 38 crores in 31st March as per March 23 to 92 crores in March 25, and if we look at the PAT has grown from 23 crores in March 23 to 61 crores in March 2025. So a spectacular jump in terms of financials as what we are seeing in for this particular counter as well. Also, if I talk about the valuations front, the company is seeking a price to earnings of about 26 times and the post-issue market cap of about 1591 odd crores post the issue. So this is what the overall picture is panning out for for this particular counter as well.
Okay. Well, thanks all three of you for joining us and giving us those perspectives. Those are three heavily subscribed IPOs. Remember, this week too, fair degree of IPOs. And coming up is an IPO-packed month too. Dilip Bhatt, founder of Pedigree Advisory, Johnson right now on the show to talk about the markets at large. But since you're in the topic of the IPOs, Dilip Bhai, want to start off with that. Good afternoon. Really good talking to you after a while. What do you make of the activity in the primary markets? In the US, in India, primary markets are seeing some heavy subscription again.
Good afternoon, Neeraj. Always a pleasure to talk to you. Just to talk about this IPO, my one take on IPOs always has been the way the stock market is valued today. I mean, it's quoting at more than 20.5 times. And you're talking about Nifty EPS growth of around 8 to 9%. Unless and until you have enough IPOs to whet the appetite of the market, I think the secondary market would have gone crazy. So in a way, I always look upon the primary markets as a necessary tool to overall maintain the stability and bring about a lot of stability to the markets. So that's what I would say. And I don't think that it's anything negative. I think we have seen that the FIs, though they are basic sellers in the secondary market, but they have been very enthusiastic buyers and subscribers in the IPO market. So that itself tells the tale that a lot of investors, especially the institutional investors, find good value in some of these IPO. And that's what overall my take would be on these IPOs.
Got it. Okay. Dilip Bhai, the buoyancy in the markets recently, are you a participant there? Do you believe this talk of thawing of the relationship, GST measures, etc., all of them lend to good sentiment and good earnings? Would you be a buyer here in the Indian markets?
So Neeraj, I think in the short run, I think possibly this the tariff and the trade deal with the US will get sorted out is what my broad take is. And that will give a good momentum and push to this market from these levels. And of course, everybody is waiting when the FIs are going to do the short covering. Possibly they will have a better hang on the proximity of the trade deal being concluded in a very satisfactory way. But what I would say is that having said that, markets in the short run possibly can show a good momentum. I would be a little more careful about the overall valuations. Of course, the GST is a phenomenal step taken by the government, especially the Prime Minister, Mr. Modi, who has been anchoring this. So I think it's a very good move, and I think it will definitely lead to a volume expansion, better utilization, and of course, a good multiplier to the economy. And that is where the investments will start happening once the utilization happens, because that has been pending for a very long time. So hopefully that will happen. But not to forget, Neeraj, that during the budget time, all of us were very enthusiastic about the tax cut that the FM had provided. And, you know, we were just going gaga about the fact that this is going to increase, there's going to put a lot of money in the hands of the investors and the retail investors, meaning the general public. And that will lead to better consumption, volume growth, and all those things. I think that is yet to play out, and that is still pending. But now combining that with GST, I think looks pretty good. So hopefully, I think with inflation also sobering down and interest cuts happening, So we remain optimistic that volume increase is bound to happen, and that will lead to a good multiplier impact on the economy and the GDP.
Right. So this is Harsh also joining in. Always great chatting with you. So, sir, talk to us about what are the themes, therefore, that one should look for. It's a rate cutting cycle, not only now in India, now US will start participating in it. We've seen markets largely range bound over the last year at the very least. So what are those, and plenty of changes on the policy front. So what are those pockets which look good?
So what I will say over here is that whatever, apart from the statements that I have made, I think the valuations definitely is not on your side at the moment. And there is a lot of hope and optimism, which was always there. And that is why markets refuse to come down. So I would say that from the current levels, whether one should be a very enthusiastic investor, no, I would say I would still wait for a while. I would not be in a hurry to buy. And coming to the pockets which are likely to do well, I think the level at which the indices are at the moment, I think a lot of sectors are really at the proper levels, I would say. And some of the sectors which are not gone up, and rightly so for the reasons, because there's a lot of apprehension on those, whether it's IT, which for last 1 year has delivered a negative returns. Index itself is where it is exactly last 1 year back. So I would say that sector-wise, no, it would be more stock-wise, stock-specific, whether there are some opportunities out over there. I think that is where one would like to look at.
Okay. So, if I were to play devil's advocate, one way to look at this is lots of short build-up where FIs are concerned. That's point number one. And point number two, whenever India's growth typically slows down, you start to see pessimism start to build in, which seems to be the case, at least at this point. Those levels have generally been good levels to buy at, because markets thereafter bounce back, and then the India story starts to unfold again. People say best growth market in the world, and come back, and FIs too come back. Do you believe this could be that point? Because your commentary seems to suggest you're being a bit cautious. So talk to us about the possibility of that playing out.
So, there is a lot of irony in whatever I have been trying to say and what the markets also have been trying to say. So we keep on hearing a lot that India is the best place to invest and India is the best place which can give very good returns. And ironically, if you see, India has been one of the single biggest underperformer since the calendar year has started. And I think if you were to take the indices, we are where we are at the moment at the beginning of the year. So that is one point that I must say. So even when I'm telling cautious, one thing is certain, that the over optimism and enthusiasm and the conviction that India is still the best place to invest, and despite the FI selling, one thing is clear, market refuses to come down. And that is a point that one cannot ignore, whatever may be the valuations. So I think a correction, possibly even when I'm telling cautious, I would be more happy markets spending sideways and time-wise correction. I would be more happy, and I would still wait for the growth to really come in. Because in my opinion, the economic parameters are very mixed. And that is adequately reflected in the kind of the profit growth that we have seen in the first quarter and possibly even FY25. So what I would say is that yes, markets have to spend a good amount of time correcting, because as of now, when I'm talking to you, I still feel that 25-26 EPS growth can be 8 to 9%. Nifty EPS growth. Next year, possibly it can be around 12%. And then if you were to 12 to 13%, but if you were to factor in the volume increase because of the GST and because of the tax break that the budget provided, then possibly it can go up to around 15%. But these are too early times to say for next year, for 26-27. But 25-26, I don't think will inspire a great confidence. I think we'll have to wait for the second quarter and third quarter management commentary, which so far doesn't appear to be all that great.
Thank you so much, Dilip, for giving us that perspective. And, it's always great chatting with you. I'm sure Neeraj echoes the same view. Thanks so much, sir, for coming in and speaking with us. Okay, an important update from the whole tariff front. Sources are telling your channel, NDTV Profit, that India and the EU are eyeing a comprehensive trade deal. Rishabh is here with more on that.
Right, some key important updates coming in on the FTA between India as well as the European Union. What we're picking up from sources is the fact that both sides are eyeing a comprehensive deal, so no sort of first tranche or an early harvest. The environment is currently very conducive in terms of negotiations, and both sides are eyeing for a full proper trade deal. What we're also picking up is that there may or may not be another round of negotiations, given the fact that most technical issues have been resolved between the two sides. All sorts of thorny, sticky issues have been ironed out, and it's the nitty-gritties that are being discussed between the two sides now. So there may or may not be another fresh round that might be coming in of negotiations. Remember, just last week, the 13th round of negotiations was completed between India and the UA. The EU Trade Commissioner, Maros Shefcovic, was in town to discuss the same with the Commerce Minister Piyush Goyal. Remember, both of them also very clearly said that the automotive sector, or rather the automobile sector, will be at the center of this free trade agreement. That is something that this free trade agreement will also see a lot of partnerships being unlocked between Indian companies as well as large automobile companies based in Europe. So that is something that the Indian industry is very keenly looking out for in terms of the outcomes of this sort of a trade deal. This will be a very, very large trade deal after India's already bagged one with the UK. Another one with the US is currently in active negotiations, and this will perhaps be one of the three largest deals that India will sign in terms of a trade deal. So a very key important deal coming in, and updates on that will be coming in on that very, very soon as well.
Thank you so much for that, Rishabh. And on that note, what we'll do is we'll slip into a very short break. On the other side, we'll be joined by Jay Bala as well as Avinash Gorakshekar to talk about the top stocks for the day, of course, and put the spotlight on DAM Capital on our bull versus bear segment. Don't go away. We'll be right back.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Back with India Market Close right here on NDTV Profit. Let's try and get in the conversation going with Jay Bala of Cash to Chaos. He was bullish. I think he would be heartened by the last few days of a move. Also joining on the fundamentals of Avinash Gorakshekar of Profit Mart Securities. Again, selectively bullish on a lot of bottom-up names in the last 1 month, and I think he would be enthused by the rally as well. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Jay, am I right in deducing that the last 7-8 days would have made you happier than otherwise? And do you expect this uptick to continue?
Yeah, hi Neeraj. Thanks for having me on the show. Yeah, it's good. The markets are doing what it's doing, but I would be even more happy if markets had taken out the earlier swing high about 25,153. The fact that markets are taking a little bit of time more than I have anticipated, that's a tad disappointing, but it's not completely disappointing. I still maintain the bullish view. The only question is, does the bullish view that I have maintained, did it start at the August low of 24,337, or is it getting slightly delayed? That's the only debate that's up. But from a 6 to 12 months perspective, I'm still bullish on the markets, maintain the same bullishness, and I'm anticipating 29,000 to be scaled on the Nifty 50. Let's see what the market does. If 25,153 gets taken out on a closing basis, this will be a more convincing bullish move, and it will add a weight to the fact that the 24,337 low, the Nifty registered in August, that's a significant low.
Well noted. Okay. And so within that construct, Jay, what themes could do well? Because a lot of people bullish on different kind of themes. Like everybody's bullish on auto and metals, and last week what did well was defense and IT amongst others. So where is it that you're most constructive on thematically, and what are the ideas for the afternoon?
Yeah, I'm bullish on autos. I've been bullish on autos since July, and I've been pointing to fresh record highs coming through for autos, and even pointed out that the gap the markets registered for the Nifty Auto Index post the GST announcement, that will most probably remain unfilled, and the markets are doing pretty much that. My objective for the Nifty Auto Index is about 28,500 to 30,500, and that's a conservative objective. And one more space I'm bullish on is on real estate space, and I'm also bullish on metals. And I pointed out metals last time that the 9,000 mark for the Nifty metals index is likely to provide support, and the markets could rally higher. But today, metals are doing reasonably well, and so is real estate. So I have two picks within the space, one from the metals and one from the real estate space. In the metal space, I have Sandur Manganese with a stop loss of 424. I'm anticipating this stock to scale fresh all-time highs past 685. This is a longer-term objective or medium to long-term objective for the stock. It's looking pretty interesting at current levels. The second stock is Prestige Estates. If you look today, Anant Raj Industries is doing reasonably well or pretty well, and I'm anticipating that to spill over to the rest of the space. DLF is doing pretty okay today. So Prestige Estates have got an interesting setup. The stop loss for the stock is 1,400. I'm anticipating this stock to also claim its 52-week highs past 2085. So stop loss at 1425 and objective of 2085.
Okay, Avinash, let me come to you. What's the sense like with some of these realty counters? So we're seeing a sharp surge today, but that's of course intraday, and you look at things more with a larger lens. So how should one look at realty at this point? A significant correction from the top? Is this an opportunity, or do you believe the cyclicality or the prolonged positive nature of the cyclicality keeps you cautious?
Yeah, good afternoon, Harsh. See, my sense is pure real estate plays definitely would do well, because I sense the second half, of this financial year, we'll see a good uptick in inventory sales. And I think with interest rate cuts, on inputs like cement, GST coming down from 28 to 18%, I think the demand across, large metros continues to be good. And I think we have been positive on large players like Lodha, Oberoi Realty, Mahindra Lifespace. And of course, North Indian players like Anant Raj, but Anant Raj is a different bet. It not only has real estate, but it also has a data center division, which is now in the limelight. Yesterday, some news came that the government is going to encourage domestic data center providers and ancillary players. So, that's the reason you are seeing the stock about 10-12%. But they have already decided to, increase their capacity. They have an installed capacity of 300 megawatts for the data center business. 30 to 35 megawatts is now given directly to RailTel. So I think, here is a company which has got the best of both sectors. And I think the real estate business is a cash cow. They operate in the North Indian Gurgaon market, which is, rapidly growing. So my sense is that these 2-3 companies could be a good bet on the real estate sector. On the outlook for the sector, my sense is that October to December could see a good bump up. July to September may just be a tepid quarter, but October to December could be a quarter where you could see better numbers from Loda or maybe something like an Opera Realty and Anant Raj. So I think we are keeping a view positive on this sector, and I've been telling our clients that accumulate these stocks slowly. Over the next say 12 to 15 months, we are structurally positive. Yes.
Okay. All right. Thanks for that view coming through, Avinash. Avinash, also curious to know, some of the railway counters are the other pocket which has done extremely well today. So what's the sense on that pocket? You feel that, and of course, we've seen a bit of a correction on some of those counters. Now we're seeing a surge back, seeing order wins coming through. How do you view those? Any favorites within that pack?
See, I think, Harsh, if you see today, Ircon has gone up, significantly, and you've seen good moment in stocks like RVNL, RailTel. I think it's basically the order inflow which has excited the markets. And I think, there's a very big runway available for these companies. We are positive on companies like, typically Ircon, or for that reason, even companies, which operate in the wagon space, typically at Jupiter or maybe at Titagar. Considering the fact that the next year possibly there could be another 25 to 30,000 wagon tenders floated by the government, and almost all these companies are sitting on large order books, so the visibility is good. In fact, Texmaco also at the current odd levels with the order book of 6,000 crores looks pretty good. See, I think you need to clearly take a slightly medium to long term view here, because at these valuations maybe the stocks may not look very cheap, but if you're looking at the next 12 to 18 months, hopefully earnings for 26 and 27 is going to be much better. And I think that's what possibly is bringing in demand, from lower levels back to the market. So I think keep a slightly medium-term, long-term time frame, and I think we have been structurally positive on companies like Ircon, or for that reason even a Texmaco, where I think the risk reward is definitely in favor of the investors.
Ircon, Texmaco are amongst the others, and we'll talk about railways in detail later on. But I think let's get in Jasmeet to talk about some of the stocks that are moving. Whether they're losing or gaining is another story, but they are moving around fairly briskly today. Would that be a good way to put it, Jasmeet?
Well, right, yes, thank you for that. Let's quickly go through the stocks and then put forward how they really fit in the overall picture for today. Now, if you look at the 3 stocks in my radar, the first one is KRBL. The stock is nearly down 10% in trade after Anil Kumar, the independent director, resigns. While he resigns on concerns with the board, what he says is, the board is putting forward the interest of other people than the stakeholder, which is at risk. He also resigns saying there's inconsistency in the board dynamics. He states multiple reasons. Let's quickly go through each one of it, and let's understand what exactly is impacting the stock price today. What he states is, there's inconsistency in recording the minutes of meeting of every board and other meets, while he also says the instance of being the information withheld, which impacts the decision making for the board. He also mentions there's a write-off of the receivables from the foreign subsidiaries. That's something to watch out. While he also says the concern with the CSR fund, which are not being utilized in a particular manner. That's the concern. While he also mentions that the variable pay is not doing the just, where it's not been adjusted very well. And they also say there's been undue interferences by other members during the board meets. So this is what are the allegations stated by Mr. Anil Kumar. While the board comes back to this, and in response to it, what they say is they appoint independent third party to review all the allegations made by Mr. Anil. While they also say is the board meet was held on a shorter notice today, given all the observations stated by Mr. Anil. While something to watch out what the board comes up with and how would the stock react going forward. If you look at my next counter for today is Yatharth Hospital, where the stock is nearly up 4% in trade today. What it's buzzing on the back of is the acquisition of 100% stakes in Sunvid Hospital, which is based out of Agra. While this deal valuation is 260 crore and it's all cash in acquisition of the company. While a bit information about the company currently has 150 odd beds and it's planned to expand to 250, which is a positive sign. It also operates in occupancy of 35%. While if you look at the revenue of the company, which is acquired for FY25 stands at 50 odd crores. While the last one is Shakti Pumps, even this stock is buzzing in trade today. It's nearly up 4 odd %. While what the reason for the buzz is, the company secures an order worth 347 crores. The order is for solar pumps. The company will supply nearly 12,000 odd pumps to the Maharashtra government, and the order is from in regards to a PM scheme by the Maharashtra. So these are the stocks which are in my radar for today.
Okay, thank you for that, Jasmeet. We'll let you go. Avinash, if I can come to you and let me come to you on the specific KRBL issue. Does it spook you a little bit, 10% down?
No, I think, Harsh, normally whenever any compliance, corporate governance issue is signaled out, the first, reaction is definitely what is seen in the stock price. I think now the management should have come out more, elaborately and should have made a very clear clarification. Although they have denied these claims, I think giving the matter to a committee, rather than that, I think the markets would have liked that they strongly deny it. And obviously they would prove it with facts and numbers. So I think in the very near term, we have seen very strong quarterly numbers, from KRBL. So the markets would obviously take a backseat. I think, nobody would be willing to put money now. They'll probably wait for the September quarter to come out, some more management commentary to come in. But I think this is very natural. Compliance issues are very important. And the moment corporate governance issues are signaled, I think the market starts looking at those numbers with a doubt. And that's, I think, the reason I don't think you're going to see any immediate follow-up buying. So I think it's better that, we take a fresh call post the September number, which are now going to be due very soon. So once that happens, I think then we'll get to know whether, this matter is serious or not. How big is it in terms of financials, in terms of the misappropriation? Because, markets are always going to be wondering about the numbers. In case it's a very small kind of issue, then the markets could ignore it. But we'll have to wait for that post-September.
Jay Bala, anything on charts?
Yeah, the short term is a bit not clear, but the stock could go down a little bit more, but it's very likely to hold above the 225 low it registered, or approximately 225 registered in April. But the long term of KRBL looks very good. So, I anticipate the stock to oscillate between current levels and the April low, and then recover higher and probably proceed with this higher degree trend later on in a few weeks' time.
Okay, well, now let's get to a segment that a lot of people wait for very, very closely, which is the chatter from the dealing rooms. And it's important to get a hang of what is being heard on the street. And because a lot of people may find it difficult to do that, we get Somit Sarkar to do it for us and come and talk about it right here on the show. Somit, good afternoon. What are you picking up from your sources?
Good afternoon, sir. Firstly, it's Tata Communication. Recently, the company had held their India, that is a non-deal roadshow in London. Quite positive commentary that has come in, and dealers are indicating that there are buy flows on institutional desk on this counter. When it comes to Amber Enterprises, there are buy flows on PMS desk is what dealers are indicating. The company will soon launch its QIP. It has already taken an approval close to around 2,000 crore is what they are looking to raise, and dealers are indicating that the demand is expected to be quite strong for this QIP. When it comes to Voltam Transformers and Bajal projects, dealers are indicating that the selling pressure in both these counters are over, and that's one of the reasons why Bajal Projects has hit an upper circuit of 5% in trades today. When it comes to Suzlon, there are buy flows on large HNI desk, and there's a buzz of a potential order win here, and that is one of the reasons why the stock has been buzzing in trade. For Avenue Supermarts, there are buy flows on large HNI desk. Dealers are indicating that some potential tie-up could come in with an online player going forward. So that is one thing that has been, that is one of the reasons why Avenue Supermarts has been buzzing in trade. And lastly, when it comes to Phoenix Mill, multiple dealing rooms have given buy calls based on technical charts. In fact, we had also indicated about DLF on Friday in trade that there are multiple dealing rooms that are indicating a buy call on this counter on charts, and that counter was up around 2.6% in trade. On similar lines, Phoenix Mill is another counter which has been indicated by dealers in trade today.
Wow. Okay. And very interesting that some of these real estate counters are finding that buzz. Could be, I don't know if it's a factor of rate cuts plus the sentiment moving up which leads to this or no. So pretty interesting. Somit, over the next few days, if you can also get in some buzz around consumption names in the run-up to September 22nd, and it will be even more
on
helpful.
Consumption. In fact, one stock that was among the chatter was Marico. that is something that few HNIs have been accumulating at lower levels.
Any rationale given there, Sumit? Anything that you're picking up about why so?
They're just buy flows, that's what.
Acha, buy flows per se
And
into
Marico,
this
yeah.
as well. Okay. And okay. So
Also,
you have a question?
I'm curious to know, Amber Enterprises, any indication on the size?
2,000 crore
Okay.
is what they had indicated.
Okay.
So around that number is what is expected, and demand is expected to be quite strong.
Yeah,
for this.
that you did mention.
Okay, Sumit, thank you for this. Thank you for this. And okay, you may have two questions, but I have one question of my own to Avinash Gorakshekar on one of the things that was picked up, which is Avenue Supermarts. Avinash, for the longest time, the last 3-4 years, the stock has not given any returns, right? Now, there is some possibility, or at least some rumor, of a potential tie-up with an online player. I mean, is this what was missing in the arsenal of this company, and can that spur the stock, or does it need something else?
No, I think Neeraj, as everyone is aware, DMart's online experience has not been good, and I think if they do tie up with an online player and they manage to scale up the business, I think there is a very big runway available. I think clearly, DMart has been facing a lot of competition from the online, competitors. And to a large extent, I think the markets were looking at this trigger, to materialize at some point of time. Now, when this thing becomes very clear, the entire game plan is understood properly, and the plan is finalized, I think the stock should get re-rated, because a lot of opportunity exists in the online space which DMart was not catering to. So I think it's a good beginning. I think we would obviously look at little more clarity from the management as to how this arrangement will work and what is the kind of revenue propensity growth potential for DMart. But we are quite structurally positive on this opportunity. Once it gets finalized, I think you could definitely see a good bump up, because the market has been not seeing very strong numbers also from the offline retail model. In fact, margins have been under pressure, profits have not grown as per what the analyst expected. So I think we'll have to wait and watch, but hopefully if this clicks, I think the second half would be a little interesting, because that could be a good trigger point for the stock.
All right, so that's the view coming in on an Avenue Supermarts on the fundamental side of things. Let's, though, quickly move to our bull versus bear segment. And today we're going to be talking about DAM Capital. Let me start off with that first point. On the top line front, they have a market share of 13.5% in the IPO market. And this market has done extraordinarily well over the last maybe couple of months. The worry, though, is the lack of diversification on the top line. The main pillar, of course, is the investment banking income and merchant banking income. And if that were to dry up, you will see cyclicality where the business of DAM Capital is concerned. Let's talk about point number 2. And here I'm going to talk more about operating leverage. So the business enjoys that very strong operating leverage because it's the nature of the business. But operating leverage playout is subject to retention of key managerial persons, and that attrition has been a bit of a challenge when it comes to a DAM Capital. Let's talk about piece number 3, and that is the strong institutional client base that DAM Capital has. This has grown 24% CAGR over the last 3 years. Currently, that base stands at 277 from maybe 140 odd. So very, very strong growth we've seen there. But the top 10 clients still constitute 36% of the top line. So that risk remains, that client concentration is large. More distribution of dividend is what they have guided for as profitability gets better. But they're saying that the current payout is modest, looking for business growth. So they're reinvesting the money back into the business, trying to grow the business, at least at this point. We'll wait for that to play out. Last piece is on valuations, and it currently trades at 16 times trailing 12 months. Given the cyclicality, I've just taken trailing 12 months. That's the more conservative way to possibly look at it. But the stock is down 17% since the IPO price. And that could well be a negative. It could weigh down on investor sentiment. Of course, from the lows, it's rallied, but it's obviously down from the IPO price. Avinash, do you have a view with regard to a DAM Capital?
Well, I think longer term, Harsh, this is definitely a good bet because it has a very strong management team led by Dharmesh Mehta, and I think looking at the kind of scalability of the business, I think 1 or 2 bad quarters does not mean that the company is bad. I think you need to take a slightly longer term view. My sense is that once the looking at the kind of capital market floats, both in the in the QIP space as well as the primary public space, I think probably over the medium to long term, a lot of value could get generated because I think they are one of the top, institutional brokers. They have a broking arm, they have an investment arm. So I think you'll have to wait for some time. But yes, I think the management bandwidth is very strong, and we are positively, positive on this on the longer term. In the short term, yes, the numbers have not been great. But I think clearly once the market improves and obviously more transactions are done, you could see a better bottom line and a better profit number because this business is largely a fee-based business. Profit margins are quite lucrative, and it all depends on the number and volume of transactions you handle. So net longer term positive, short term it could remain volatile.
Okay, so interesting. Avinash, sorry, I want to throw in another question with regard to similar cohort of businesses. For example, maybe a JM Financial. Do you prefer some of those other names over a DAM Capital?
See, I think JM Capital, if you ask me, has got a much more broad-based business model. They have an ARC unit. They also have an institutional arm. They also do, the investment banking business. So they are a much more broad-based player. Now, here, frankly speaking, at the end of the day, it depends on what is the kind of mix. When investment banking takes a backseat, they have the other two divisions to actually help them. So JM Capital could be a better stable bet, considering that DAM Capital is largely focused on the investment banking side, and of course broking is there. So JM Capital could be a better bet if somebody wants a more stable kind of, steady kind of growth. In case of DAM Capital, the returns could be quite good, but there could be more volatility in the business.
Okay. Jay Bala, this capital market plays, and do you like anything here?
Yeah, JM Financial obviously is the strongest, but the trend there is coming to maturity. From that sense, I will avoid for now. But what you might want to look at MCX. MCX recent low at 72.96 looked like a complete corrective decline from its recent 52-week high of about 9,200 and change. So this might be an interesting play from a short-term perspective with a stop loss of 7,200, possibly heading back to fresh 52-week highs around 97.50.
Okay, and with that, let's slip into a very short break. On the other side, we bring you an extensive piece on Avenue Supermarts. It's a new segment that we've taken up, Profit Intelligence, and it gets you, and we'll also get you top buy today, sell tomorrow picks. Stay with us.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Welcome back. Thanks for staying with us here on India Market Close. Now, one pocket which is doing very well in trade today is the railway PSU stocks. Railtel, RVNL, Ircon, all of them gaining in trade. And this is especially after the Railways Minister, Ashwini Vaishnav, announced over 77,000 crore of rail projects in the Northeast. My colleague Anushi joins us with more on that one.
Well, Harsh, a couple of pegs that we are seeing today, in terms of the buzz for some of these counters in the railway sector that we are looking at, just talking about higher volumes in particular stocks. Now, Railtel Corp, Ircon International, if you talk about 6 to 7 times the volumes that we are looking at in comparison with the 30-day average, while RVNL, Jupiter Wagons, Sitagarh also clocking those higher gains that we are seeing. But a couple of reasons, the first one you've highlighted, 77,000 crores kind of package that we are looking now this in terms of railway projects coming on stream. But other than that, India is also set to build new projects or new lines in terms of, the areas which are near the Chinese border that we are looking at. So estimated project cost of this would be around 30,000 crore, and these projects, these new railway lines, along with bridges and tunnels which would be developed, are expected to be completed over a period of 4 years is what we are seeing. In terms of new order wins also, there have been a couple of order wins in focus. Just today, Railtel Corp, we are also seeing strong gains over this 210 crore of an order size that they've received from Bihar Education Project Council. Now, do note, just last week as well, the company had received about a 700 crore plus of an order from this particular council as well. Apart from that, Titagarh Rail is another counter that you should be watching out for. Now, it has been buzzing the last 2 sessions as well. Here, the company has launched their 3rd diving support craft for Indian Navy. This vessel is a part of a series of the 5 DSCs, that's diving support craft, that we are seeing being built under Make in India initiative that we are looking at. Do note that the company has come out with 2 new verticals, that shipbuilding and safety related works, in which it wants to increase its focus on the shipbuilding side as well. Last one on the radar is Jupiter Wagons. Now here the company, just on Friday's session, we've seen about 113 crore of a new order coming in for the company, and with this company, if you look at its total order book, that stood roughly at 5,900 crore. This is as of the first quarter end that we are seeing. So a couple of new order wins, as well as new projects from India, the Railway Ministry, is something that we should be watching out for the space.
Okay, thank you so much for that, Anushi. Jay Bala, let me come to you with regard to some of these counters. Some real buzz seen, zing on all of those counters. What's the sense like? Are there any favorites in your bag?
Yeah, amongst the 4 that you have shown on screen, I would say avoid RVNL. The other 3 looks good. And most of the other 3 have almost a similar setup. In the long term, it looks good, but I don't think this is start of a long term, possibly further chop possible. So treat this as just a short term up move, something that gives 10 to 15% upside from current levels. And Ircon, Railtel, and Jupiter Wagons are okay. Avoid RVNL.
Okay, well, it is, that's a bucket which has done very well. We're seeing these things happening in buckets. If it was defense and IT last week, it is starting off today with railways. Let's see if some of the others go ahead or no. What is roaring ahead, of course, is Anant Raj, but I can't take my eyes off Aegis Logistics. With that report that came in, and that stock really shining in trade, 7.83% higher. The targets by JM Financials, Priyankar, is much higher, by the way, than what the current numbers are, but that is doing very well. The other one, which you heard the guest speak about it on the channel today at 9:03, Parag Thakkar spoke about Piramal Enterprises and why that business is worth looking at. Now, I want to spend some time on Piramal because it's important. The first question is to Jay Bala, and then we'll get to the fundamental question. Jay, just so that if it is a good trade, people shouldn't miss out, would you trade Piramal Enterprises on the upside?
Yeah, 1045 is the stop for this. The short term looks good, and in the medium term is a bit more choppy. So but there is a short term trading potential for it to, like a swing trader, can hold on with 1045 as stop, possibly heading to about 1350, 1360.
Avinash, their own presentation speaks about how FY26 profits would move from 450 odd to 1300. Then if you apply a CAGR, and which is what Parag Thakkar's comment was, that his estimate is that FY28 the profit numbers could be between 3,000 to 3,500 crores. It's a financial business, so fine, the ROEs lower, but eventually higher ROAs, etc., will drive the ROEs higher as well. And with that kind of growth, the market will see potential because the valuations are good. Do you buy that argument, or would you prefer other financial names, other names in the financial space?
No, I think, Neeraj, your point is right that it has been a beaten down stock, and I think valuations have come up from higher levels. I think clearly, one could take a contra bet and take a small exposure, but we like to see how the September quarter and the December quarter pans out. I think my sense is that some amount of improvement has already got into the system, and that would benefit Piramal. But whether 450 crores becomes 1,300 crores, we'll have to wait for maybe 1 or 2 quarters. I think there's no harm in waiting and maybe making a small allocation in terms of a small kind of nibbling in the counter as of now. But yes, I think the management has been very proactive now. I think they've been taking a lot of corrective steps. They had a lot of NPAs in the past, but I think all that has got corrected. So I think I would also concur with the view that the structural story seems to be quite good because the valuation seems to be good. And I think, if you compare the other biggies like maybe a Bajaj Finance, here I think you're getting a business at a decent kind of valuation kind of matrix. So, some amount of riskiness would be there, but we'll prefer to wait for the next 2 quarters before we make a aggressive call. But yes, as of now, one could safely buy a small quantity and wait for the next 2 quarters numbers.
Okay, so that's the take coming in on some of those names. Indian pharma companies are set to gain from a policy change in the US. The much discussed Biosecure Act is coming back under discussion, and how will this benefit Indian CDMO companies specifically? Varsha here with her detailed research. Varsha.
Well, thank you so much for that. If you see 2024 and 2024 was actually a year of pharma. Now majority is because of the US Biosecure Act, due to which all CDMO companies saw a good run up when it comes to this their returns. Well, now the Biosecure Act is actually back with revised version, but just for the benefit of viewers, what is Biosecure Act is nothing but a US law which is proposed by US, which will bar US companies to have an agreement or business with certain Chinese companies. Now because they consider it as a threat to the nation's security. Talking about the timelines, let's see when this was introduced. So Biosecure Act was introduced in Jan 2024, after which it was passed by House in September 2024, post which during this period a lot of pharma companies saw a huge buzz into the stock prices. But in December 24, that is 9th December 24, Senate actually blocked the bill, and now in August 25 we are seeing this revised US Biosecure Act to be back under consideration. Talking about the revision, what changes now, if I were to talk about, in old bill, if you see bill is bearing BGI or certain Chinese companies, I would say, but in the newer version they're going to refer to an official list of companies which will update annually, and there are no specific Chinese companies which has been involved in the revised version. Onto the who will be the beneficiaries in when it comes to Indian CDMO companies. You have Divi's Lab, Syngene International, Newland Labs, Laurus Lab. All these companies will actually be benefited from US Biosecure Act. Now, talking about how this is going to benefit Indian companies, because US drug makers will move away from Chinese manufacturers and will give agreements to Indian CDMO companies, and a lot of pharma companies have seen the proposal coming from the RFQs coming from US companies, because US companies want to diversify their supply chain from China to Indian companies. Now, let's see what companies have to say. So a lot of companies, including Laurus Labs, Syngene International, Divi's Lab, they're all very bullish when it comes to US Biosecure Act, and they're seeing a lot of demand from US companies when it comes to CDMO opportunities. Lastly, let's see how these companies have been performing since the introduction of Biosecure Act. If you see Divi's Lab from Jan 25 to December 24, Divi's Lab have seen almost 70% of growth in its stock price. Newland Labs have seen 193%. Jubilant have seen 112%. While on 9th December, when Senate actually blocked US Biosecure Act, all these companies have seen negative returns from, Newland Labs was down almost 7%, Piramal Pharma was down almost 7%. So this shows that how important is this Biosecure Act for Indian CDMO companies. And post December 9, if I were to talk about, all these companies except Laurus Lab, all these companies have seen almost 0 to negative returns. Now this shows the potential that Biosecure Act is for Indian CDMO companies.
Serious potential there in Varsha. Thanks for bringing that out. Keep in mind that bout of underperformance that we've had for most companies since the time the Senate blocked it, except for say Laurus Labs, also puts them in there. And which is why, by the way, we have trade data too, but since we're on the topic of CDMO, let's get that going first. Jay, this just consolidation that has happened in this pack, Divi's, Piramal Pharma, Cohance, Piramal Pharma, what have you, right? This whole bucket of stocks except for Laurus. Now, is this, were they consolidating before an up move? Can that up move come in now? Is it visible in the charts? And if not, maybe a stock like Laurus, which has actually done well within that CDMO space. What are your thoughts on any of these?
Yeah, obviously Laurus is also the strongest stock on the charts. Divi's at the moment is an avoid. It's still trending lower, and I've tried to be bullish on the pharma sector, and it's been a disappointment, and it's been moving more sideways rather than trending up. So the other stock, if you want to leave out Laurus Labs, is Newland Laboratories. That's still got fresh 52-week highs pending for it, but you're bound to see short-term chop here. So I like both Laurus Labs and Newland Laboratories from the CMO space, but Laurus Labs is the strongest.
Okay, Avinash, do you have a view, and do you have a set of stocks or maybe a couple of stocks that you tilt towards to play this?
I think, apart from Laurus, I think Glenmark also could be a good contender for the CDMO space. Our sense is that, this is a very interesting opportunity and where there's a very significant runway available for these companies. So I think, we could see a significant amount of re-rating over the next, say, 2 to 4 quarters. Typically, I would say that this is a space where not only the cost advantage, but even the technical skill sets of the Indian companies are far better. And I think a lot of foreign companies are definitely getting the CDMO business done from India. So I think Glenmark looks to be quite interesting. Of course, within that, Laurus and Divi's definitely have dominant positions, but Glenmark could be a good performer provided we see better numbers over the next couple of quarters.
All right. Okay. So those are some views coming in on how do you play this theme, and what Avinash's views are on that. Let's quickly go across, talk about some volume buzzers and some big ones. We've spoken about Anant Raj, but that is on top of the list. Volumes at 35 times 30-day average that we're seeing on an Anant Raj. Very similar number on a Banco products. Can you pull up the stock chart for a Banco products? Let's quickly look at how it's... Okay, so it's 11% higher. Aegis Logistics. Let's pull that one up as well. Volumes at 14 times 30-day average. That stock perked up 8.6%, and then there's a Chemplast Sanmar. Volumes at 14 times 30-day average. Again, that stock too, up just about 3.5%, even though it saw a spike midway through the day of trade, and that's probably leading the stock higher. The last couple of ones are, one, there is a KRBL on that list. Volumes at 13 times 30-day average. And obvious reasons, we've spoken about KRBL. And Apcotex Industries is the other one. Volumes at 10 times 30-day average. That stock not doing as well, 3% lower. Sigachi Industries, volumes at 9 times 30-day average. So that's broadly that list of really strong volume buzzers. Jay Bala, any of those stocks attract your attention on either side, buy or sell?
Yeah, I already have Anant Raj on my radar, and the recent low it registered about 512. I think that's unlikely to get broken. There's a very important price move from the April low. You see market trends as when it moves in 5 steps as bullish, and it moves 3 steps as counter trend move. And Anant Raj from its April low has got a 5-step move and a corrective pullback post that, and now it's rising strongly. So watch out for this. This is likely to be a very strong mover, and this is just the beginning of a strong move. And I also like Banco products, but it's a very late stages of its up move that started from last year. So residual short-term bullishness somewhere about 725 to 750, but not a big mover. Likely to be an exhaustive move when it reaches 725 to 750 levels.
Okay, so thanks for that. But onto our special segment of Profit Intelligence. We have Avenue Supermarts today on our list, and the stock has consistently underperformed in the past 1 year. What has not worked for the retailer is what we're going to try and get you. Is it time for the tide to turn? Mahima's here with that story.
Right, so Harsh, not just for past 1 year, in fact, since 2021, the stock has remained in that range of 5,000 mark and not able to cross that 5,000 mark as well. Now, if you just take a look at the stock performance, 1 year it's down around 10%, 5 years has given a return of around 117% only. Now, in terms of what's not worked for the counter, well, couple of things, of course. First one being competition that has been coming in from the quick commerce space. We've seen how the overall grocery market share has been taken by counters like Blinkit, Instamart, Zepto, where the competition is rising. Recently, we also saw how all of these platforms are burning caches, and even DMart has to go ahead and burn caches in terms of giving discount, and one of the highest discounts being given right now is by DMart Ready at around 23%. So that is another aspect, and because of the cashman, the overall overall discounting going up, the overall amount that they are making per square feet is also not increasing. In terms of valuations, of course, this has always been the debate for something like an Avenue Supermarts. They remain punchy still, currently trading at around 112 times PE as well. Now, with regards to where sales and profit growth stands, sales has seen a growth of around 19%. This is the 5-year CAGR versus that of other retailers which have managed to grow beyond that 25% mark, and same with profits as well. Profits CAGR, 5-year CAGR has been around 16% versus other retailers that have done a 20% plus. In terms of margins, if we take a look at the past 5 years in terms of operating margin, it has remained in that range of 7 to 8% only. They've not been able to manage to increase their overall margins, plus competition intensity is putting pressure on the same store sales growth as well as the margins overall. Now, whether the tide is going to turn or not, recently they did a con call where they've given a strong outlook. Store expansion, they've said that overall their store growth that they are planning is around 10 to 15% every year. They'll double down on investment in store additions. So despite of the rise of quick commerce, they are doubling down and very confident when it comes to implementation of the brick and mortar model. In terms of DMart Ready, the growth that they're expecting here also is around 10 to 15% every year. In terms of the private label portfolio, they've said that we are here to grow the business and not build a private label portfolio. So their focus right now is to penetrate into tier 2 and tier 3 cities, expand more in terms of store presence going forward. Lastly, with regards to where ANR stands, there are 10 buy calls, 10 hold calls and 11 sell calls for this particular counter. So pretty much even Stevens here as well. But this is the entire view. Probably going forward, we'll have to see as to how much DMart Ready is actually catching up with this quick commerce race, and how well is the DMart team able to implement their overall store expansion as well.
Okay, thank you so much for that, Mahima. Avinash, I believe we've posed a question to you with regard to an Avenue Supermart, but just to kind of reinforce that, what's the sense like? Can the next 5 years be meaningfully different from the last 5, or will valuations continue to weigh on a stock like this?
No, I think, Harsh, the valuations have been expensive and will continue to be expensive. But I think what the market is looking is at volume growth and the profit growth opportunity. I think if they are able to crack the online business successfully, then I think you could see a fresh wave of re-rating. But I think, in the last 2 to 3 quarters, margins have been under pressure. The growth has not been happening. So that's the reason the stock has not been going anywhere. And I think, other smaller, retail players have been growing quite strong, considering the fact that their base has been small compared to DMart. So I think one is the base level growth because it's now become a large player. So I think growth on the top line front has to accelerate and has to be at least 15-20%. And obviously, even if margins are thin, that could be more or less made up by the revenue growth. But clearly, I think the markets are looking at a stronger growth trajectory in terms of the earnings growth, which has been more or less flat. So I think we'll have to wait and watch. But unless this happens, I don't think you're going to see a fresh wave of re-rating. The stock could at best consolidate. And hopefully, this online initiative, if it takes off well, then I think that could possibly give in a kind of a better earnings growth kind of trajectory. But we'll have to wait and watch. The existing business is definitely facing a lot of challenge from the competition from several domestic players.
Yeah, that's true. But I remember that I think maybe I should have asked Mahima this, but just 3 days ago we did a piece, and Mahima did a piece which spoke about the best and the most economical place to buy things this season. And if you were okay with a one-day delay, and I think Avenue Supermart scored the most points for the most economical purchase that you can get. I wonder what will happen once the GST cuts come in and people make a beeline for buying things. A lot of comments that came in that people will not buy 2 toothpastes because they'll brush more. But the idea is not that. The idea is that people may upgrade from whatever they might be buying to maybe a branded toothpaste, and therefore do the sales of some of these things go up or not. So I think I'm really looking forward to that, and therefore the branded FMCG players as well as some of the online players or the offline players, but mass retailers could all benefit.
Well, yes, and I remember that. I remember that
right here on the screen.
And yes, and that clearly reflects. That picture clearly reflects that DMart, as such, very competitive. It's just the 10-minute delivery that the other players give, or the hour or so delivery that some of the other players are giving as an optionality, which is causing the kind of traction that they're getting versus a DMart. But yeah, it would be interesting to see if things change. Jayabala, time for the BTST, STBT strategy. We are at 324, so very close to close. What's the take? Any suggestions?
Yeah, I'll make a quick comment on DMart. When I was here on the 18th of August, I had pointed to DMart being an important stock to watch out for. It was at 45.50, it went up to 49.50. And there is a reasonable possibility that the 4th September high of 49.50, once that's crossed, DMart could break out. So watch out for it. And when it comes to BTST, I have a BTST on SBI cards with a stop loss of 889 with an objective of 925.
Okay, SBI cards, that one doing fairly well for itself, 5% higher. Avinash, anything within the lending pack? We've not spoken much about banks or NBFCs or insurance in today's show. Anything within the lenders that look interesting? There are a couple of initiation notes on a Northern Arc. I wonder if you've looked at that one, covered that one. Any sense?
No, I think, Northern Arc will definitely do well. I think sometime back there was an institutional placement of equity to large marquee investors, and I think they have a fairly good asset base. I think growth numbers hopefully in the second half of this financial year would be better. But we are sticking with some very well tracked names. Typically, I think if you talk about the public sector banks, I think which have been underplayed for some time. I think probably credit growth is going to pick up. The government is very conscious that with the GST cuts, they want the credit flow to improve significantly in the system. And I think all the public sector banks are gearing up for that. So I think second half could be a strong quarter for large banks like Bank of Baroda, SBI, Canara Bank. So I think, one could definitely look at these banks because, in terms of their valuation, they still trade at a significant discount to the private sector banks. So this is one space which is largely ignored and where the growth potential is pretty large. But yes, I think the participation has yet not picked up. So one could take a contra bet and look at these names. I would not be surprised that maybe the October to December and the Jan to March quarter could see a big strong comeback for these banks, considering that asset quality, the balance sheet health is pretty robust now, Harsh.
Got it. Okay. Fair call. The last piece of the puzzle for the session today is I'm borrowing the note that came in from Jefferies, and they wrote about how cable and wire companies have seen a price uptick, and therefore that's a pocket you want to look at. How stocks like Astral, Supreme, etc. could actually see expansion of margins by 100 basis points again because of the PVC prices control. So very constructive on both of those segments. And in the Goldman note on Havells, spoke about how people should build positions in that stock if it were to correct. So 4 or 5 names out there, but Havells clearly the strongest of the pack, and ending at the highest point of the day. Jayabala, as we wrap up the show, is there a trade in Havells?
Yeah, I like Havells for the short term. I don't think the stock is going to drop below 1450. So I'm anticipating a short-term bump up to somewhere about 70 to 1810. So 1510 is an important support for the stock. So I don't think that's going to break.
Okay, a couple of minutes from close. Thank you, Jay. Thank you, Avinash, for joining us this afternoon, giving us all of those views. And viewers, let's quickly look at how the Nifty has shaped up for the day, intraday first. So first the summary, probably a 1/5 of a percent lower on the Nifty, a 1/10 of a percent higher on the Bank Nifty. So a slight bit of outperformance seen here, but the intraday chart shows it's been fairly range bound. It's not been too choppy per se, just a 90-point band in which the Nifty has traded in. And yes, we've given up 25,100 for sure today by around 40 odd points. So that's a decent giveaway. In terms of the heat map, and that will also give us the texture, and within that, if you just see the gainers to losers, of course, that's what really stands out. Around 32 losers to just about 18 gainers. Nothing substantial on either side. A Jio Financial has shown some amount of steam today, 1.4% higher. And there are some names on that bottom rung, especially sitting from the IT basket and the pharma basket. So those are the two baskets which were under pressure. You'll see those names, Cipla, Dr. Reddy's, you'll see Sun Pharma there as well, TCS, Infosys, M&M also making it to that list, and Asian Paints within consumption and a tightening within consumption. So those were the buckets which didn't do as well. Now broadly, let's take the sectors, and likely that's what we will see as well. Pharma down 0.7, IT down half, Nifty Auto down 0.4. So that's how those shaped up. Nifty India Defence Index up 0.7. So that saw some amount of zinc. You saw the PSU Banking Index also do fairly well, 0.6% higher. But again, no material movers outside of the Nifty Realty. That one has shown some really good resilience today, 2.6% higher. Let's pull up the constituents of the Nifty Realty Index, and that will also give us a sense on how broad-based it was. Extremely broad-based, but Anant Raj was the star of the day, 10% higher. Outside of that as well, some of the other names also doing fairly well for themselves. You want to look out for this index because it's done well today, and you'd want to see how it does for the rest of the week. Now, I want to also look at the breadth of the market, the gainers to losers on the overall index, and that has, of course, tapered down just a wee bit, but continues to be resilient is what I would call it. Let's pull up the Nifty Mid-Cap Index. Some outperformance seen there. The Small Cap Index as well, 0.5% higher on the Nifty Mid-Cap. That one's done decently well on a day like this. 0.7 for the Nifty Small Cap. So both of those reflecting the breadth, which was fairly positive. The BSE 500 top gainers, top losers. Not surprised to see a Vodafone Idea up 7 out there, but KRBL down 10. Not surprised at all to see that, given that independent director resignation. Then there were some others which saw some pressure, but again, nothing material or meaningful. Metro Brands down 3 was the only other one which kind of caught the eye. Railway stocks have done very well today. So an Ircon and RealTel, etc. have done very, very well. And Aegis Logistics, Piramal Enterprises also saw zing. Piramal Enterprises was the call today morning by Parag Thakkar, and the stock is up 6% at close. SBI Cards was the other one, 5% higher. But what to watch out for? And let's pull up that list. Yes, you'll have the Indian unemployment rate, but let's look at some of the dividend adjustments that need to be made. Those are some of the names that you need to keep in mind. Some really, really small, a Karnataka Bank, 5 rupees per share. Godfrey Phillips, 2:1. That's the bonus issue on Godfrey, which will reflect tomorrow. And you will also have a new IPO, 451 crore Euro Pratik sales IPO, entirely offer for sale. IPO opens 16th, closes 18th, price band 235 to 247. So you'll have all of that tomorrow, but we'll catch you up on some of these tomorrow before open, get you started for the day. For the moment, from Neeraj, myself, everyone who puts this show together, thanks so much for watching. Stay tuned to NDTV Profit. Market Express will take all the action forward, give you a complete download of what's gone on in markets today.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
You're tuned into Market Express with me, Shreyanshi Singh. Let's get straight to the show then. In fact, first things first, a quick look at what the markets then did. In fact, Indian markets kickstart the week on a volatile note with the Nifty ending a range-bound day of trade above that 25,000 level, as you can see on your screens as well. 30-pack Sensex is the one that traded flat with a negative bias, wrapping the day below those 82,000 levels as well. When you also take a look at broader markets, in fact, they outperformed the benchmarks, with the mid and small cap indices ending with gains of nearly 0.5% each. Jio Financial Services, Bajaj Finance as well as Eternal were among the top gainers within the Nifty 50 basket. But moving on then, let's also get your quick check going. As far as the sectoral picture then is concerned, concluded mixed for the day with Nifty Pharma, Healthcare and IT declining the most. Nifty Realty was in fact on the other hand the top gainer, buoyed by government's proposal of a 20-year tax holiday for data center builders, and we'll get you some more details throughout the course of the show on this one as well. The advanced decline ratio ended skewed in favor of the bulls with over 1,600 stocks settling in the green. So that largely is the kind of sectoral picture that you had coming in. But tell you what, let's also quickly start taking a look at some of those buzzers as well in trade. In fact, KRBL is the first one that makes it to our list. And you're talking about a leading player in the basmati rice market facing scrutiny after the resignation of one of its independent directors. And the company's independent director, Anil Kumar Chaudhary, is the one who's resigned, citing inconsistency, in fact, in the board dynamics. In fact, he's also highlighted that there are inconsistencies in recording of minutes of board and committee meetings. Also stated that prevailing dynamics of the board are inconsistent with the interest, in fact, of the shareholders. Stock, in fact, was down about 10% in trade. As you can see on your screens as well, 9.5% downtick is where the stock ended the trading session as well. But let's move on to another stock that is, in fact, buzzing in trade on the flip side. Nadanak is the one that we're talking about. It was up over 8% in trade, and that's after a bullish note coming in from DAM Capital. The brokerage, in fact, has initiated a buy rating on Nadanak, also citing a number of key growth drivers for the financial services company. Let's take a look at some of those growth drivers as well. The report, in fact, highlights several factors that it believes will propel Nadanak's performance in the coming years. So the brokerage, in fact, is particularly optimistic about the company's increasing focus on direct-to-consumer lending. That's one of the factors seen as a major positive for its business model. In fact, speaking of growth, DAM Capital also sees the company's asset quality improving and are also penciling in an earnings CAGR of 39%, and that's over financial year 26 to 27. So that's another stock for you to look at. But tell you what, let's keep it going with the healthcare sector. Yatharth Hospitals is one to look at. It's expanding its presence in North India with a strategic acquisition. The company, in fact, has announced that it will be acquiring a 100% stake in Shantived Hospitals in Agra, and this is going to be through an all-cash deal. Now, this acquisition itself is valued at 260 crore rupees. The move, in fact, is a key part of Yatharth Hospital's strategy to strengthen its footprint in Uttar Pradesh. Let's also quickly take a look at Shantived Hospital. Now, this is the one that is currently operating with a capacity of 150 beds. A key factor in this particular deal is its expandable capacity of up to 250 beds. So that's something that you're looking at for this particular hospital, which also provides the company with significant room for future growth in the region. And the deal, in fact, also reinforces the consolidation trend that we're seeing in the Indian healthcare industry as major players look to expand their regional reach as well. So that's one important note coming in, one important highlight coming in as far as Yatharth Hospitals is concerned. But speaking of notes, then let's move on. Let's also take a look at Goldman Sachs, because they've issued a fresh report when it comes to Havells. The Global Investment Bank, in fact, is maintaining its positive stance, reinforcing its buy rating on this particular counter. The firm has raised its price target for Havells to 1,720 rupees, which is a significant show of confidence driven by its belief that the company is well positioned to capitalize on a growth revival in the electrical and durable sector. However, the report does caution that the upcoming quarter, that is Q2, could be temporarily disrupted by uncertainties surrounding the implementation of GST. And despite the short-term hurdle, though, there is still silver lining, because Goldman Sachs is viewing any potential weakness in the share price as a compelling opportunity for investors to buy And the long-term outlook, in fact, remains strong for this one. Goldman Sachs also believes that a sustained revival in earnings growth can, in fact, lead to a re-rating of this particular counter, driving its valuations even higher. So that's an important update coming in as far as this brokerage note is concerned. But let's move on. Let's get your check going as far as Apollo Hospitals then is concerned. In fact, they've announced a major expansion of its oncology business. The company is setting up a new 100-bed oncology center in Gurugram, and this is a facility that is part of the second phase of a larger expansion which will see the establishment of a 500-bed hospital in the city. And this dedicated oncology center is a long-term project that you're looking at. You're looking at construction and completion that is expected over the next 4 years. So that's an important update coming in for Apollo Hospitals. The strategic move is part of Apollo's ambitious plan to double its oncology business to 5,000 crore rupees within the next 3 to 4 years. So those are some of the plans that they also have when it comes to this particular company. The expansion into Gurugram is going to be a key pillar in achieving this goal as the company looks to strengthen its presence in North India's growing healthcare market. So that's the overall outlook as well as far as Apollo Hospitals is concerned. But let's also shift our attention to the IT sector. That's the one to talk about on the back of a global brokerage firm, UBS, in fact, that has also initiated coverage on a bunch of counters. First things first, let's take a look at Persistent Systems taking a highly positive view on the company's prospects. You've got UBS talking about them and also initiating a buy rating on the stock, set a price target of 6,730 rupees. The brokerage, in fact, calls Persistent Systems the best placed among the mid-cap space, citing its robust financial performance as well as strategic position. The report, in fact, also highlights the company's strong execution on both top-line growth as well as margin expansion. So those are some of the key levers for growth that they're talking about. But the main bullish thesis from UBS centers on the company's readiness for the next big cycle. In fact, according to their Gen AI disruption framework, you've got Persistent Systems that is considered the best positioned to capitalize the opportunities presented in the generative AI wave. So that's quite the bullish note coming in. And speaking of bullish, let's also keep it going with the IT sector then. In fact, UBS has initiated coverage on Emphasis with a buy rating. And the move also comes as the brokerage sees a strong potential for a revenue growth recovery for the company following a period of multiple headwinds. So that's one important note, one important commentary coming in here. For several years, you do have Emphasis that in fact has contended with challenges stemming from its large client DXC technology, its subsidiary digital risk, as well as broader issues within specific verticals. However, UBS's report suggests that these headwinds in fact have largely subsided, paving the way for accelerated growth. So that's quite the bullish note coming in as far as this particular counter is concerned. But let's move on. Let's take a look at some of those railway counters as well, because they were in fact also abuzz in trade. The country is moving forward with a significant project to build new railway lines near its border with China and other neighboring countries in the northeast. In fact, this project, which has an estimated cost to the tune of about 30,000 crore rupees, involves the construction of 500 kilometers of new railway tracks. Now, this ambitious plan is not just about expanding connectivity. You're talking about a strategic move, in fact, to improve logistics, military readiness in these remote yet vital regions. And the government, in fact, aims to complete this project over the course of the next 4 years. This new railway network will also complement the extensive road infrastructure already developed in the region over the past decade, ensuring better civilian access and faster response times in case of emergencies or military operations. So that's an important one coming in, RailTel. And a bunch of those counters were in focus, and that's one important trigger for the railway pack. But from one trigger to another for this particular pack, then let's talk about order wins, because it's in fact order wins galore for a bunch of these railway counters. I'm talking about RailTel Corp and Jupiter Wagons in particular. RailTel Corporation has secured a new letter of award from the Bihar Education Project Council. The order is valued at 210 crore rupees, and it's for a project to supply digital infrastructure. Meanwhile, you're also looking at Jupiter Wagons, that's also in the news. A key arm of the company has also gotten a letter of award worth approximately 100 crore rupees thereabout. This new order adds to its already robust order book, which stood at over 5,900 crores as of June 2025. So that's the entire railway pack, in fact, that was in focus. And speaking of order wins, then let's move on. Let's take a look at another counter that was in focus. And I'm talking about Shakti Pumps. The company, in fact, has bagged a 347 crore rupees order, and this is for the supply and installation of over 12,000 solar pumps. This is the second tranche of a larger order under the Pradhan Mantri Kisan Urja Suraksha Evam Utthan Mahabhiyan. I'm talking about this B scheme in Maharashtra. And the program, in fact, aims to empower farmers by providing them with solar-powered irrigation solutions. The stock was buzzing away in trade with gains to the tune of about 3%, as you can see. Closed the day with gains of about 4% as well. But let's move on. Let's also get your check going as far as Vedanta is concerned. In fact, Vedanta's power arm has signed a pact with SEPCO Electric Power Construction Corporation to resolve a long-running dispute. Now, the disagreement was related to the engineering, procurement and construction contracts for a thermal power project. And this is a major win coming in for the company because SEPCO, in fact, has agreed to withdraw its arbitration claims against the power business. These contractual and payment disputes had been a major bottleneck when it comes to this particular company as well, specifically blocking the demerger process in the past. With this key legal and financial hurdle now cleared, all attention is going to be on the final NCLT hearing scheduled for September 17th as well. So that's a date that you should be marking on your calendars as well. But let's move on. Let's also take a look at the Ministry of Electronics and Information Technology, or MeitY, that is circulating a draft of a new national data center policy. The draft proposes a substantial 20-year tax exemption for data center developers. This is a potential game changer for companies like Anant Raj, which are making significant investments in the sector. And the tax holiday is contingent on companies meeting specific targets on energy efficiency and capacity addition. The draft also includes a proposal, in fact, to allow GST input tax credit on capital assets used for data centers. This policy comes at a crucial time for Anant Raj, which has been facing delays in its data center projects in the National Capital Region due to pollution control regulations, as you can see on your screens as well. This is one stock that ended the day with gains of about 10%. So that's Anant Raj that I'm talking about. But let's move on. Let's get you the word going as far as brokerages are concerned, and let's get your verdict on a new cross-sector report that you had coming in from Jefferies on India's spirits industry. That was also an entire pack that was buzzing away in trade, painting a very bullish picture is what Jefferies was doing for the sector. In fact, the brokerage also believes that spirits category offers strong growth potential driven by premiumization. It projects also a double-digit top-line growth and a meaningful room as far as margin expansion is concerned. Across the board, let's also take a look at some of the counters that they've in fact talked about. Radico Khaitan is the one that is a top pick, with Jefferies in fact projecting a robust 35% EPS CAGR as well. The company is seen as a growth leader for United Spirits as well. Jefferies sees a favorable risk-reward scenario, and the stock's recent correction of over 20% has, according to the brokerage, already priced in near-term headwinds. The dark horse, though, in this particular space, according to them, is Allied Blenders. The brokerage, in fact, sees significant upside coming in for this one. So that's something that you should be marking in terms of what is being penciled in for this entire space. That's one space that was buzzing in trade. But speaking of buzzing, let's talk about Tata Technologies as well. The stock was a buzz in trade after announcing an acquisition that significantly boosts its global presence and capabilities. The company is acquiring a 100% stake in Germany-based company for an all-cash deal valued at about 75 million euros. And the acquisition is expected to be EPS accretive from the very first year itself, signaling a strong financial rationale for the deal. So that's the latest coming in as far as this particular counter is concerned. But since we're talking about this counter, let's also get to the brokerage verdict when it comes to Tata Tech. JP Morgan, in fact, has a bearish stance coming in on this counter, maintaining an underweight rating is what they're doing, with a price target of 570 rupees. This view, in fact, comes despite the recent acquisition of the German automotive ER&D company, like I mentioned, which the brokerage, in fact, acknowledges as a positive move. So that's the entire brokerage verdict coming in as well when it comes to this story. But let's move on. Let's get you some more inputs and some more news and updates. In fact, Vodafone Idea has moved the Supreme Court challenging additional AGR demands, seeking a waiver of 45,000 crore rupees from its total dues of over 83,000 crore rupees. The court will be hearing the plea on September 19th. So that is a date that you should be marking on your calendars. But Vodafone Idea, in fact, has asked the Department of Telecom to reconcile dues up to financial year 17 under the 2020 norms. And the case follows the 2019 ruling expanding AGR definitions and the 2020 order allowing telecom firms 10 years to clear over 93,000 crore rupees in dues. So that's an important update coming in. The government, in fact, now holds a major stake in the company after converting over 52,000 crore rupees of dues into equity. So that's Vodafone Idea that you should be looking at. But let's move on then. And onto some macroeconomic data then. In fact, India's wholesale price inflation rises to 0.52% in the month of August, marking a shift from a deflation of 0.58% in July and reaching a 4-month high is the milestone, in fact, that you're looking at. Primary articles inflation improves to a 2.1% decline from 4.95%, with food articles dropping 3.1% as well. So compared to 6.3% in the last month, vegetables deflation eases to 14.2% from nearly 29%, while fuel and power worsens to a 3.2% fall as well. Manufactured products, let's take a look at that as well, because there you have the inflation climbing to 2.55% from 2.05%, and food items in fact contribute 73 basis points to the uptick. As core WPI also rises, ICRA forecasts WPI reaching about 0.9% in the month of September due to higher global crude and commodity prices. So those are some of the triggers that they're looking at. Plus a weaker rupee is also something that you should add to that list according to ICRA, though food may return to deflation, and that is the verdict coming in from them. But let's move on then. As per the Society of Indian Automobile Manufacturers, or SIAM, India's auto sector saw a significant boost in August, with passenger vehicles sales also reaching 322 lakh units. This marks a substantial increase from last year. In fact, two-wheeler sales also rose by 71%, with several manufacturers also reporting strong growth. In fact, the industry is optimistic when it comes to the festive season, expecting further sales momentum. So that is something that you should be penciling in when it comes to this particular sector. But tell you what, let's keep it going with the auto sector then. Maruti Suzuki's popular hatchback, the Swift, is getting cheaper by up to 1 lakh rupees. Let's take a look at the latest updates as far as this particular story is concerned, because thanks to the government's GST norm reform, you do have the new prices that will be effective from September 22nd, 2025, just in time for the festive season. The Swift's price drop, in fact, ranges from 55,000 to 1.06 lakh rupees, depending on the variant as well. Other Maruti Suzuki models like the Alto, K10, Espresso, Wagoner, Celerio, as well as Desire, Baleno, and Ignis are also seeing price drops ranging from 20,000 rupees to 85,000 rupees. So that's the latest coming in as far as the auto sector then is concerned. But from one sector to another then, let's move on to Indigo. Indigo, in fact, opens a new aviation corridor between India and Greece, launching 6 weekly direct flights to Athens starting early January 2026. And the airline introduces India's first aircraft, inducting it by the end of 2025 for this particular route. In fact, this move marks Indigo's expansion into Europe, connecting Indian travelers to Greece with enhanced long-range capabilities. And this particular aircraft that I'm talking about boosts efficiency and passenger comfort, strengthening Indigo's global footprint as well, while fostering tourism and trade ties with Greece. So that's some news, good news as far as travel then is concerned. So if you're planning a trip to Greece, this is also something that you should be looking at. And in terms of plans then, let's move on. Let's get you one more plan that you should be adding on your list. Today is the last date to file ITRs if you haven't already done so, for those not subject to audit, including salaried individuals and presumptive taxpayers. Taxpayers. In fact, the deadline set for September 15th was extended from July 31st after those changes in ITR forms. Missed filings are going to be drawing penalties, interest, and loss of some tax benefits as well. So that's an important update coming in. 5,000 rupees thereabout is the sort of tax that you can be hoping to pay if you do miss this particular deadline. So do keep in mind that this is a deadline that you should be marking on your calendars. But let's move on to some national news. Then the Supreme Court, in fact, has stayed key sections of the Waqf Amendment Act, saying that some of its provisions could lead to arbitrary power. In fact, it paused the role of district collectors in deciding ownership disputes and struck down rules that limited the board to only people practicing Islam for 5 years. Other parts of the law remain in force, while petitions against it are heard. So that's the latest update coming in there as well, but let's move on. In fact, the Gujarat High Court has received another bomb threat, this time over email from an unidentified sender. Police quickly reached the spot and began their investigation. This is the fourth bomb scare at the High Court in just the past 3 months. So that's an important update coming in there. And speaking of important, let's take a look at an appointment. In fact, Acharya Devrat took oath as the governor of Maharashtra. He already serves as Gujarat governor and has been assigned this new role after C.P. Radhakrishnan stepped down to become India's vice president. The oath was administered in Sanskrit by the Bombay High Court Chief Justice as well at the Raj Bhavan. So that's an important update coming in, but let's also move on then. The Indian Navy, in fact, receives INS Androth, the second indigenously built anti-submarine warfare shallow water craft. This boosts our capabilities, in fact, against China's growing presence in the Indian Ocean. So that's an important update coming in. Garden Reach shipbuilders and engineers in Kolkata delivered the 77-meter vessel on September 13th, marking progress towards self-reliance in this particular space. The ship, named after Androth Island in Lakshadweep, strengthens anti-submarine and coastal surveillance with lightweight torpedoes as well, indigenous rockets and advanced sonar propelled by diesel engines and water jets. In fact, it also features over 80% indigenous content. So that's an important update coming in there. But tell you what, that's a wrap on Market Express. Thank you so much for tuning in.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Benchmarks end lower after a choppy day of trade, with Nifty snapping its 8-day gaining streak and Sensex closing below 81,900. Nifty Realty finishes as the top sectoral gainer. Mid and small cap indices outperform Nifty and the Sensex. US is India's top export destination between April and August 2025 amid tariff-related uncertainty, with exports of over $40 billion as India's trade deficit modestly falls to $26.5 billion in August. Supreme Court will hear Vodafone Idea's petition challenging additional AGR demands on the 19th of September. These are for the period until 2016 to 2017. And it's the last day to file your income tax returns for FY25. We tell you what happens if you don't file them today. Meanwhile, the Delhi police arrest the driver from the BMW crash that claimed the life of a senior finance ministry official, registers a case of culpable homicide, destruction of evidence and rash driving. Adolescence wins big at the Emmys, with 15-year-old Owen Cooper bagging an award for Outstanding Supporting Actor, while Stephen Graham takes home 2 trophies. The studio scoops up 4 Emmys, including the Best Comedy Series. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So first up, let's take a look at how the markets fared today. Benchmark indices ended the day on a slightly weaker note. At the close, we saw the Sensex slipping 118 points to settle at 81,780. The Nifty was also down 0.18% at 25,060. Now, on the sectoral front, we saw auto, IT and pharma stocks declining about 0.6% each. But in contrast, realty, power and metal indices bucked the trend, closing in the green with gains of 0.5 to 2.5%. My colleague Harsh now joining in with a detailed roundup of the day's market action. Harsh, over to you.
Well, the Nifty 50 index was muted in trade. We traded in, again, a very, very tight band, 90-odd points, down around 1/5% thereabouts. Some bit of outperformance seen in the Nifty Bank, but not enough to support the Nifty 50. The IT index was down around 0.5%, and therefore some of the IT names languished at the bottom, along with a couple of auto names, an M&M and Eicher, including some consumption names as well, like a Titan, like an Asian Paints. Some of those names, dominated the bottom of that pile. So that's how some of those names played out. Now let's talk about some of the gainers. A Geofinance, some unlikely gainers today, but a Geofinance was the one that really stood out, nearly 1.5% higher in trade today. But again, no material gainers or losers, and M&M was the top loser, but no material ones to really talk about. Now let's talk about sectors. So auto, of course, but IT, along with some bits of consumption, saw a little bit of pressure where sectoral indices were concerned. Let's talk about the top gainer, because that one really stood out, and that was the Nifty Realty Index, up 2.5%. So that was the one big mover. Outside of that, it was fairly, again, range bound. You're talking about the advanced decline, well, largely 900 to 1300. That's how the split was. And when you're looking overall at even some of the mid cap and the broader end of the spectrum, the mid cap and small cap indices reflected that. So the heavyweights pulling down the Nifty 50, along with just the fact that the advanced decline ratio on the Nifty 50 was weak. But overall, on the NSE, not as bad, and therefore what you saw was a bit of an outperformance both from the Nifty small cap as well as mid cap indices, and those were up over 0.5% in trade today. So saw some zing there where markets are concerned. Now let's talk about some of the top gainers and losers. KRBL was one stock which was down 10%. Independent director resigning and all of the concerns highlighted by him as reasons for him resigning, not doing the stock any favors. But on the other end, railway stocks were in focus, and Ircon, Railtel, RVNL, some of them really rallying in trade today. So all of those were well in focus as well. But outside of that, not too many meaningful losers on the BSE 500.
Right, Harsh, thanks so much for that. Meanwhile, like you were rightly saying, we saw KRBL falling nearly 10% in trade today after independent director Anil Kumar Chaudhary resigned from the company's board, citing concerns over corporate governance. Meanwhile, the company has now responded by saying that a board meeting has been convened in the matter and that a third-party firm will be appointed to review allegations made by Chaudhary. Meanwhile, India's domestic passenger vehicle sales de-grew by 8.8% to 3.22 lakh units in August 2025, according to data by the Society of Indian Automobile Manufacturers, or SIAM. This is attributed primarily to recalibration of dispatches by passenger vehicle manufacturers. However, the two-wheeler segment grew by 7.1 compared to the previous year, with sales of 18.34 lakh units. To get us an overview of the August data, Puneet now joining in with all the details. Puneet, over to you.
Well, SIAM has released the data for the month of August for all automakers, and there are some key interesting trends that are getting formed. Now, for the uninitiated, SIAM data gives out the wholesale data for the month of August as well as for the year to date, and this largely means the stock that companies like Bajaj Auto, amongst others, send to their dealers during the month. They also gives us some perspective of the export sales that have happened in the month, as well as the production for all these automakers that have done. And in this month, we largely saw the four-wheeler car makers essentially pull back the inventory, and that's largely led by what was the news because of the GST rate cut reduction. Now, Prime Minister Narendra Modi on 15th August from the Red Fort mentioned that GST rates will be rationalized, and post that, there was news flow that GST rate on cars will be reduced from 28 to 18%, which did officially happen on September 3rd. But buyers were wary and they pulled back essentially from purchasing their cars in the second half of the month of August, and that's reflected in the sales for the passenger vehicles, which is down 9% in this particular time frame. Despite GST rate cut reduction across the board on two-wheelers as well as on the three-wheeler space, we have seen that sales were strong in this month as well. Two-wheelers were up in this particular time frame at almost 7% on a YOY basis, almost at 18.33 lakh units that were sold in this particular month. Whereas for the three-wheeler space, we have seen that sales are up 8% to almost 75,000 units. When you look at the the segmental performance as well in the two-wheeler space, Bajaj Auto has been a disappointing factor in terms of domestic sales. In the month of August, sales were down roughly about 11% versus a 7% growth in sales that is seen in the two-wheeler space, and it's a consistent problem from November 2024 onwards that Bajaj has been facing. On the other hand, someone like TVS had a 27% growth in this particular month, and that's both led by motorcycles and scooter segment of the company, where the company operates brands like Jupiter amongst others, which got that benefit as well. Four-wheelers across the board continue to be under pressure. We have seen that because of the GST rate cut, but the production was also impacted in this particular month, and that's largely led by the cut at the sales network as well. Going forward, we will be looking at a lot more launches that will start happening from the month of September and October around the Diwali season, and a lot of the buyers which were sitting on the sidelines should come back on September 22nd, and that will be a hope as well as a key aspect of recovery in the auto space going forward.
Puneet, thanks so much for that. Let's shift focus to some big breaking news coming in right now. My colleague Rishabh Bhatnagar, who has been tracking this very closely, joining in. Rishabh, India-US trade talks set to resume tomorrow. As we understand, Special Secretary and Chief Negotiator Rajesh Agrawal has confirmed the arrival of the US team and lead negotiator in New Delhi as early as tonight. Give us all the details.
Right. The most important negotiations that are underway with respect to a free trade agreement are between India and the US, and we have the latest update coming in on that. A US team of negotiators led by the chief negotiator Brendan Lynch is set to land in India tonight. talks, and these will be one-day talks that will be starting tomorrow, and thereafter there will be some sort of a build-up on what the direction that these talks are headed in. We'll have more clarity as and when we go on that. But what we're seeing is that all sorts of trade issues will be brought on the table tomorrow. That is the big development coming in with respect to India and the US. Remember, the 5 in-person rounds of negotiations were done. Now we're finally having the 6th one, though this is not a formal round of negotiation. This is another one of these sort of virtual meetups that have been continuing between the two sides. So this is not being registered as the 6th in-person round of negotiations, but rather a continuation of talks, given that both the sides have continued to be in touch virtually, if not meeting in person. So you'll have these talks starting in tomorrow. At least one day is what we expect these talks to last for, and you'll have more on that coming in as well.
You said something very interesting. You said that the talks were never something that had stopped happening, or neither had the correspondence or the communication between the two countries, neither had that actually stopped happening. But at the same time, there was a pretty bitter stalemate that was going on at the same time, where there were certain amount of tension. We heard some comments coming in from Donald Trump. India, of course, chose to remain quiet, chose to stand her ground, and that has been the stance right from the beginning. But you know, on the back channel were all of these talks happening. Can you shed a little bit of light on that? Because wondering, and I'm sure all of our viewers are wondering that as well, how does that really change or direct the trajectory of the discussions that are going to resume tomorrow?
Right. What's important to note with respect to any sort of bilateral talks that happen is that they happen on various levels, right? So right from a secretarial level to a chief negotiator level to a minister level, and apart from all of these which are trade domain, and non-trade domain, they happen on a political level, on a diplomatic level as well. So given that the India-US relationship is so consequential, and there are very, very deep ties on all levels of government as well as trade, those talks were continuing, and we confirmed that today with the Special Secretary Rajesh Agarwal, who is also the chief negotiator on the India-US bilateral trade agreement. He confirmed to us that various discussions were ongoing on the diplomatic level, on a trade level. So even if ties rather sour on one of these levels, be it a political level or be it a secretarial level, there are always various other back channels and various other tracks that continue to debate and continue to hold that relationship. So that's what we're seeing on this front. We saw about 3 to 4 days back, you had the political sort of will coming in with respect to a reconciliation between President Trump and Prime Minister Modi coming in on Truth Social and X. Both of them agreed to the fact that there will be a conclusion of negotiations at the earliest. And to that, we have an update now that negotiations are continuing. In-person negotiations will start tomorrow. One day is what we're hearing, but definitely there will be more building up on that.
Right, Rishabh, thanks so much. Stay with us. We also have Anil Trigunyat, a former IFS and distinguished fellow at the Vivekananda International Foundation, now joining us on the phone line. Good evening, sir. Thank you so much for joining us this evening. This is the big news that's coming in right now. We understand that these talks are set to resume tomorrow. We're looking at India holding firm on protecting its agricultural and dairy sectors, and that has been the stand, right from the very start. How can then negotiators balance national interests and still be able to unlock or really, access greater market access from the US?
Well, that is essentially the art of negotiation. We have conveyed our red lines where we cannot really concede. But then there are other areas in which they could have a greater market access, either in terms of negotiating a better, rate of duty or tariffs that could be perhaps which are of more interest to them. In addition, we should also not forget that for the United States, a bigger pie is also in the various defense deals they are looking at. So I'm happy that these negotiations are going to continue. Of course, we'll only know the result, what happens. We have had negotiations for too long. almost nearing the finalization, and then we went back on it. More importantly, there are a lot of confusing statements have been coming from various people in the administration, including Howard Lutnick and Navarro. Don't consider it done till it is done. And that's how I look at it.
Right. So with evolving, geopolitical dynamics in West Asia and beyond, how can India really leverage its diplomatic relations to support its trade and economic interests at this point of time?
Well, I think that's precisely what we are doing at the moment. The only problem we have at the moment is with the United States, which has imposed arbitrarily 50% of tariffs for a very unfounded reason and logic. And therefore, we had to diversify. So if you have seen in the last 1 or 2 months that India has started diversifying its new markets, trying to send trade teams, and so many delegations are going all over. So it all happens in a while, but the efforts are being made now to focus more on alternate markets. You can't keep on putting all your eggs in one major basket. I mean, that is something we have to look at. And that's precisely what is being done. At the same time, United States is a very important and major partner, and we'll have to continue to negotiate with them because, see, while we are talking, then there is every chance of coming to some kind of an understanding and some kind of a rational eventually prevailing. And so it is important. Then we are also pushing for our free trade agreement with the European Union, with the West Asia, of course. More, if you come to see the figures of trade and other things that have increased significantly. Likewise, many other countries, Russia, China, they are also interested in getting more products from India. We'll have to go to ASEAN, Africa. So there are many of the markets which are there. So it's not that you are out of options. Only thing is one becomes a little bit complacent, thinking that it is your biggest market, so it will continue to remain like that. And if the writing on the wall was clear, I would say that we should have read it in Trump's first term itself, when he took us out of the GSP benefits and imposed 25% tariffs. So it's not nothing new. I'm quite sure our negotiators and their strategists have taken these factors into account. And that's why India showed its strategic patience.
Absolutely. Thank you so much for that fantastic insight. We'll, of course, continue tracking this development. But this is the big news that's coming in right now. US-India trade talks will continue tomorrow. We understand that the team will land this evening in New Delhi. And this particularly important and significant, with India achieving a significant trade surplus with the US. Remains to be seen how the strategic advantages will actually be used by the negotiating team. Let's move on now. We saw intense activity taking place in the primary markets that put Urban Company in the spotlight as the most subscribed IPO of the past month. But after attracting record demand, all eyes are now turning to how Urban Company has performed since its listing. The big question, can the most subscribed IPO of 2025 deliver on investor hopes? Somit now joining us with a closer look at the numbers and market reaction.
Well, yes, Urban Company remains in focus given the fact that it is one of the most subscribed IPO in the last 1 month. If you look at the subscription data here, the QIB portion was subscribed nearly 147 times. The NI, that is the non-institutional investor portion, was subscribed 78 times, while the retail portion was subscribed close to 41 times, taking the overall subscription number to close to 109 times. And it has received bids worth around 1.13 lakh crore rupees as against the 100 crore which was in offer. And this bid amount of 1.13 lakh crore is the highest that we have seen in 2025 at least. But this is not the only company that has received a stellar subscription. There are at least 12 companies in 2025 so far which have seen a subscription number of more than 100 times. Highway Infra, which raised close to 130 crore rupees, saw a subscription number of close to 317 times. Indopharm, Denta Water, Quadrant Future and Stallion India, which raised anywhere between 200 to 290 crore rupees, saw a subscription number of anywhere between 188 to 228 times. Apart from that, there was Standard Glass, Regal Resources, JNG Electronics and Borana Weaves, which raised close to 140 to 410 crore rupees, while the subscription number was anywhere between 150 to 185 times. And apart from that, there was Lakshmi Dental and Aditya Infotech, which raised close to 700 to 1300 crore rupees, and the subscription number was anywhere between 106 to 114 times. But do remember that strong subscription number would not necessarily result into strong gains post-listing. Now, obviously, all the companies that have seen a subscription number of more than 100 times have seen a stellar listing. listing, but gains since then have been limited. In fact, out of the 11 companies, 5 of them have seen negative returns, 2 of them have seen returns of less than 10% while the remaining 4 have seen some good source of return. Now, if you look at the first graphic here, which is Highway Infra, which was subscribed nearly 317 times, the subscription, the listing day gains was close to 73%, but since then the stock has declined around 28%. Aditya Infotech, 60% listing gain, 32% since listing day. Quadrant Future, 53% listing gains that we have seen, but since then the stock has been flat. For GNG Electronics, 41% was the listing gain, but since then the stock is up just 7%. In case of Stalin India, 40% was the listing gain, and since then also the stock has performed good, around 63% return that we have seen. Regal Resources, 29% listing day gain, 19% downtick since then. For Indofarm Equipment and Lakshmi Rental, both of them saw a 29% gain on the listing day, but since then the stock is down around 8 to 44%. Then there is Borana Weaves, which saw a listing day gain of 18%, but since then the stock is down 14%. And for Standard Glass and Denta Water, the listing day gain was close to 16%, and since then the stock have just gained around 12 to 14 odd percent. And given the fact that Urban Company was subscribed nearly 109 times, the grey market premium at least indicates that the listing would be strong in case of Urban Company, northwards of 60% plus gains we could see on the listing day.
Now moving on, the Supreme Court is set to hear Vodafone Idea's plea on September the 19th, challenging the Department of Telecommunications' fresh demand of 9,450 crore rupees in AGR dues. Vodafone Idea has sought a complete recalculation of dues from the pre-FY17 period, arguing that the new demand exceeds the scope of the court's earlier ruling and points out possible duplication in the calculation. Now, the DOT is expected to file its explanation highlighting gaps in accounting. My colleague Aishwarya joining us with the latest updates on this developing story. Aishwarya, how critical is the Supreme Court hearing for Vodafone Idea's financial future, especially given its claims of duplicated dues and the company's ongoing funding challenges?
Well, the fresh AGR dues that have been pressed against Vodafone Idea by the DOT, like you mentioned, over 9,450 crores of additional dues. This is going to be challenged in court, Vodafone Idea against the DOT on September 19, as you rightly mentioned. We has asked for recalculation of dues pre-FY17 period. So this calculation does account to as of this date. Now the 9,450 crore, what does that demand really include? It does have and includes about 2,774 crores as far as the post-merger entity is concerned, which is linked to that. This particular amount is linked to Vodafone as well as the Idea Group post the merger entity was made, which is around 2018 or so, while the 5,675 crore rupees out of that 9,450 amount pertains to liabilities from the pre-merger Vodafone Group. So this is the breakup of this particular amount that the DOT has slapped as far as Vodafone Idea is concerned. Now, Friday we will see as to what are the developments, what arguments both the side place. We does claim there has been duplication as well as reassessing what dues exactly this whole calculation entails. As far as its past dues are concerned, overall over 83,000 crore in dues, and even earlier the Supreme Court did strike down and dismiss its plea of 45,000 crore of waiver as far as Vodafone Idea's total AGR dues are concerned. So more trouble for Vodafone Idea for sure as far as this new additional AGR dues that has been slapped by DOT. Back to you.
Right, Aishwarya, thanks so much for that. And like you rightly said, we'll continue tracking this case that comes up for hearing on Friday. But let's move on. Today also marks September 15th, the last day to file your income tax return for the financial year 24-25. Now, missing this deadline can lead to penalties, including a late fee and interest charges on unpaid taxes. For more details on the filing process, penalties and how to avoid mistakes, our very own CA Mahima Vajrajani joins us with insights.
There is no extension for filing your ITRs from here on. 15th September is the deadline. So if you've not filed your ITRs, till today, go ahead and file them today itself. Now, who does this deadline apply to? Basically to individuals and HUFs who are not subject to tax audit. So individuals, salaried individuals, professionals and business owners where the turnover is less than 1 crore. Now, in terms of just a brief about how quickly you can go ahead and file your income tax, you can just log into the website, use your PAN and your password, navigate to the ITR, select the right assessment year. Of course, this is important. Choose your filing status, choose the right ITR according to what all sources of income you have, review and of course confirm your information, pay your taxes and then e-verify them within a month. This is important. If you don't e-verify your ITR will be declared as invalid. Now, if you don't file one till 15th September till 12 AM in the night, you will have to pay a penalty of 5,000 rupees if your income exceeds that 5 lakh rupees, and below 5 lakh rupees, the penalty is up to 1,000 rupees. Now, in case you fail to file your ITR by today's deadline, you can file a belated return by paying this penalty plus fees, which is 1% every month till the time you file your ITR. So that's an important one. Now, in case you have made some mistake in the ITR that you've already filed, you can also file a revised ITR, and that deadline should be till next 31st of March. So that is also an important one. Lastly, in terms, and that is updated ITR, so that will be ITRU. So, you know, keep these things in mind, but of course, the most important one is if you haven't filed your ITR yet, go ahead and file it today before 12 AM because today is the deadline, and as per CBDT, there is no extension.
You heard Mahima, no extension, and that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Hello and welcome. You're watching KYC. I'm Harsh Saita. Now the travel space is obviously going to get some boost. One is GST, of course, and it's also global travel as well as domestic travel, which is doing fairly well for itself. One stock at the center of all of that is the TBO Tech, and what I want to know with regard to it is that it's made a recent acquisition. It's a North American acquisition and therefore gives it access to North American market. By the way, TBO Tech is more like a platform, B2B platform company, buys inventory from hotels and sells to other businesses. So you'll have other platforms or Make My Trip, etc., where TBO Tech enables sale. So that's the general nature. Now, what does this acquisition give them in terms of market, of course, but also in terms of existing business? And could they have done this organically? So these are the two pieces which I'd want to know first off, right off the bat. The third piece is I'd want to know what this does in terms of immediate top line impact. I spoke about that, gave you a hint of that, but that's broadly the way in which I see this. Also further acquisitions, some color around that is what I'd want to know. And now travel trends, both global as well as India. Mind you, 75+% of TBO Tech's top line comes from global facing businesses. So you want to know whether that part of the business also continues to do well or not. And of course India, because GST and all of the tailwind that we're seeing with regard to hospitality in India, that itself gives the India tilt. Can you double your top line in 3 years? Now this is the question which may or may not get us an answer, but I'm going to try and get us that answer, because they've hinted, they don't generally guide numbers, but they've hinted that they will do 20% plus. So I'd want to know this. The sixth piece is with regard to upsides to margins, because as you scale a tech business, there is an upside, but I want to understand how much is the upside, because at least the guidance doesn't seem to suggest a very, very strong upside, but some upside is starting to appear in that sense. And of course, number 7, competition. If you have the likes of a Skyscanner in the B2C space, and if you're in the B2B space in comparison to that, I'd want to know what are the other competitors doing in this space, and is there a larger opportunity for them, and what it does to therefore pricing as well, right? Because the business model is also unique, and let's straight away get to it. It was incorporated in 2006. This is an overview. It's evolved from a single product air ticketing company into a leading global travel distribution platform. Distributes purely B2B, mind you, not B2C, so it doesn't sell to you. It's a proprietary technology, seamlessly connects travel buyers and suppliers, including agents, by the way. So you have agents listed on this TBO Tech platform, and when they make bookings through the platform, TBO Tech makes money. Now let me try and again go back to the slides. Ensuring streamlined transactions across diverse landscape of global travel. They have around 189,000 registered buyers and 13.2 million plus transactions that they do annually. Let's talk about the products and a wide range in which they now operate in. They started off with only air travel, but look at the whole host of products and services they do now, and of course it is rapidly expanding. Outside of this, it could be cruises, it could be, there you go, so you already have that, cargo, cruises, sightseeing, transfers, all of that is what they currently cover. Now let's talk about the business model. It earns in two possible ways. One is when you make a sale, it makes a commission, so that's one model. The second model is it buys hotel inventory, marks it up, and thereafter sells it. So these are the two models in which they operate, and it's the net commission from what we understand is 3 to 4% from airlines and 6 to 8% from hotels. So your hotel composition is far more than the airline composition. It sells technical software related services, providing a shell website which the customer can use as a B2B hotel service provider by adding their own suppliers. So that's broadly the way in which they do it. Let's look at the platforms, and they'll come up on your screen one by one. That's TBO Academy. It's the learning platform for travel agents and travel trade partners. You can actually go in and learn and thereafter register. It has comprehensive Booker Rewards program exclusively for buyers. Let's talk about, and that's TBO Plus. There's Zamzam and Kizan, focuses on religious travel in Saudi Arabia. There is Paxis, a web and mobile-based platform for corporates. So that's the other angle. There's Travel Partner Solutions, enables the partners such as loyalty programs to sell travel products globally. And then there's Roma application, e-travel pockets, pocketbook for travel agents and travelers around the world. And mind you, they continue to make acquisitions, right? So they continue to do that, and that obviously adds to the product portfolio or the bouquet as well as the geography. Look at the overseas presence that they have. They have it across the board, Middle East, all over, Brazil, China, and USA, Egypt as well. So some presence in Africa as well, South American presence also there. So that's just the broader outlook of what TBO Tech does. Now let me talk about the metrics, and we'll start off with the first one, the income statement, the balance sheet, the cash flow, and we'll give you the 3-year numbers for these. Thereafter, we will switch over to the return ratios, the shareholding, street cred, valuations, and street coverage. We'll cover all of that with regard to where a TBO Tech is concerned. Mind you, listed in May of 2024, so it's not a very a seasoned listed company, if I can call it that. But it's a 17,000 market cap, 17,000 crore market cap company. So in no way a very, very small company either. So again, just some trivia. Now let's start off with the income statement, and you have it in front of you. 18% top line growth is what they've done. EBITDA has gone up by 120% nearly on a CAGR, 3-year CAGR basis, and profitability has gone up 90%, 3-year CAGR. So you're seeing very strong profit tailwind. Those margins have inched higher, and clearly that's a thumbs up, no complaints with regard to that income statement. I'd be surprised if there is any complaint to that. It's looking like a very, very solid income statement overall. Now let's talk about the balance sheet, and even the balance sheet in terms of the debt is not looking exactly too large. So while they continue to make acquisitions, the borrowing number is just at 136 crore. This is both short-term and long-term combined. You've got equity of around 1,200 crore. Mind you, it's a 17,000 crore market cap company as of today. So you want to also derive the price to book. That's what it is. But it's sitting on pretty much good cash and bank balances. Look at that cash and bank balance. It's looking very, very healthy, and therefore clearly a thumbs up. They need to put that into play, whether through acquisitions or otherwise, and that's likely one of the pieces that we will also get some color on. Let's talk about the cash flow now, and the cash flow numbers will flash on your screen. You've got the cash flow, which has been on an improving trend. If you look at the realization, CFO to EBITDA, quite decent in that sense, no concerns. Now, one piece that you'd want to know is that think about this from a business perspective. You make a booking, you make a payment, and therefore your cash flow will typically be healthy. And TBO Tech will make either the margin or either a fee on that booking, and therefore no reason why there should be a cash flow mismatch. Typically receivables are low, that's just the nature of the business. Also, inventory isn't too high, and therefore you've got a decent kind of run where CFO to EBITDA is concerned, and no concerns with regard to that as well. So we've given that a clear thumbs up. Now let's talk about the fourth metric. We'll talk about return ratios. In terms of the return ratios, again, extremely strong tailwind that we saw. It's come off because they've raised money, and therefore you've seen those return ratios shrink a bit. I'm not sure how much will that shrink as capital gets allocated. Also, you've got a solid pile of cash that they're sitting on. So I'd want to understand as to how this evolves as well. Is there a target number? But broadly looks quite solid on an overall return ratio basis. 53, 43, and even prior to that it was at 18. Of course, FY21 was a muted year for travel. But after that as well, you've seen a resurgence where the return ratio is concerned, and it's doing fairly well for itself. So we've given that a thumbs up as well. No complaints over the last 4 to 5 years. Let's talk now about the shareholding pattern. And promoters hold around 45% of stake in the company. There's been no major change, but because it's below 50, we've given this a neutral, as we always do. FI holding is decent, but they've seen some amount of selling. DIs have seen very, very strong interest over the last 5 odd quarters. And therefore, you've seen what you've seen in terms of the shareholding pattern. We've given this a neutral broadly because of those factors that are playing out on the shareholding side of things. Let's talk about the street cred. And since May of 24, the stock has not done exactly much, especially since listing. So since listing, if you're holding it, it's not given the best return. But at the same time, if you've bought it at maybe 6 months back, you've got a very solid return for it. So we've given this again a neutral because it's a fairly range bound kind of return if you're looking at it from a 1.5 year perspective. But from a 6 to 8 month perspective, it's been quite strong in that sense. So that's broadly the take on the street cred. Let's talk about the valuations now. And when you stack it up against some of the B2C players in the same industry, in the same space, you'll see that it's obviously valued at a much, much richer multiple. But that's also because it's tech-based, one. Second, it's multi-country, so there's no focused geography there, and therefore that gives it a more broad-based risk profile. And third is because it's decently fast growing, which all the others also broadly are. It's not like some of the others are not. Of course, a couple of those three have some issues or concerns in themselves, but outside of that, it's a fairly good mix where travel is concerned to grow at a 20% odd kind of growth clip. So broadly, that's the take with regard to the price to earnings, but it's certainly expensive, and therefore we've given that a thumbs down. That's the only thumbs down that we have at this point. Let's talk about the street coverage and wrap it all up. In terms of the street coverage, there's 7 buy calls, 1 hold call, no sell calls. The average upside is 15%. So you've got a decent runway, it seems, at least that's what analysts seem to suggest. There's a decent runway overall in terms of the average 12-month upside as per analysts on Bloomberg. Let's talk about all of the ratings. Let's stack them up and they'll come on your screen in just a minute. There you go. The income statement, can we rewind the slide, please? So the income statement, again, you've seen very strong growth here, so clear thumbs up. The balance sheet, good cash balances, we spoke about that. We also spoke about the fact that there's very low to no debt. Cash flow, well, it's a clear thumbs up. We spoke about the way in which they generate cash and therefore typically should not be a concern. Return ratios were solid, 18% at FY22, currently sitting at 27%. Very good for an Indian company. Shareholding pattern is a neutral because of all the changes that have happened. Hopefully there's stability there. Street cred, you've again seen over the last year or so, the stock fluctuate, but at the same time not give very, very good returns, and therefore may be some bit of pressure piling on to holders of the stock. Valuations is a thumbs down because it's expensive, 80 times. I'd want to know whether very, very strong growth can follow the kind of valuation it commands. And then you have street coverage where there's a 15% upside, which doesn't look bad at all at a 78 times earnings. That gives TBO Tech a 6 out of 8 on our KYC ratings. And it's a very, very strong rating for a company in any case. Let's go across. We have joining us Ankush Nijawan, who's the co-founder, joint MD at TBO Tech. We also have Gaurav Bhatnagar, who's the co-founder, joint MD at TBO Tech, joining us. Gaurav, let me start with you. On the acquisition first, you've obviously acquired Classic Vacations. It gives you a footprint into North America. Give us a perspective. Could this not have been done organically at this price? And what does it do in terms of a lever for you for growth?
Thanks. Firstly, thanks for having us over. And also my compliments on the detailed analysis you've done on the business.
Thank you, Gaurav.
It's very impressive.
Thank you.
But look, it's a fair question to ask that could this be done organically or not? And a couple of things when we look at very mature markets like North America, and look at the example of the company that we did acquire, Classic Vacations. This company has been in existence for nearly 50 years. So when you go to developed countries, you realize that the incumbent ecosystem is very mature and it is very stable. So while we have been in the market ourselves and we've been building organically and will continue to do that, right? So the TPO brand will continue to exist along with the classic brand. But if you want to have a seat on the table, it's likely going to come by acquiring something reputed in the market. You could always argue that maybe another 3 to 5 years you could build something equally large. But when we have access to capital, when there is a target available, and when we see clear synergies, it does make sense to accelerate that journey. Now, keeping in mind that North America is the largest luxury travel market, and because TBO focuses on the premium outbound traveler, for us to not be in that market would cause significant struggles even with acquiring more supply or on the overall growth. So yes, this could potentially be done organically over a 3 to 5 year period. But if a good asset is available and we have the money for it, our sense was we should go ahead and do it.
Okay, Gaurav, an extension to that question. What does it do to your top line pretty much immediately? How much of the North American market do you acquire as a result of this 1,000-odd crore rupees that you've spent? And second piece is it margin accretive for you or not?
Okay. So in terms of GMV, this business adds on a full year basis, if you were to look at the prior 12 months, this business adds a little less than about $500 million of GMV. Which would, just from a perspective of what we do with rest of the country regions, it would make it probably the second largest region for us after Europe for hotel sales. So it's substantial for us from that perspective. The margin profile of this business is slightly different from the organic business, and I'll spend a couple of minutes explaining that. This business operates at a fairly high 22% take rate. The reason that take rate is so high is because the business operates on a pure commissionable model where half of the take rate actually goes back to the travel agents. So if you were to look at it from a perspective of how we look at our margins, the margin is closer to half of it. So maybe about 11.5%, which is still significantly higher than our organic margins. So from a gross margin perspective, the business is accretive. From a perspective of EBITDA to revenue conversion, this business is slightly dilutive. If I have to look from a GP to EBITDA, and there are synergies possible over there, by the way. So there are cost synergies as well as there are top line synergies possible to bring it at par with what our overall numbers are. If I was to look at it as EBITDA to percentage of GTV, which a lot of travel businesses look at, so maturing travel businesses would look at the metric of how much of GTV is converting into EBITDA. And there it is clearly accretive because it is sitting at more than 2% EBITDA to GTV. For the overall TBO business, it is about 1% or probably a little bit lesser than 1%. So from that perspective, our view is that it adds significantly to our financials. The other bit I must add is the cash profile of the business. The business sits on roughly 17% of annual GTV as cash in any point of time because North America books much in advance. So it's extremely negative working capital. When we acquire the business, we get more than $80 million of cash in its balance sheet. So overall, our perspective is that even without realizing the synergies, when you combine the two businesses together, our view is that it improves the overall balance sheet as well as the P&L.
Okay. Ankush, I'll come to you in 1 more minute. Sorry, you'll have to bear with me because I want to ask one more question on this acquisition. Gaurav, what I haven't been able to cover as part of my presentation is what's the valuation multiple that you've bought this business at? Give us the cash component. Of course, you've given us that, but give us net of cash. How does it stack up just broadly? Because we've described how you trade in terms of a multiple. So just trying to understand whether it's accretive for you or not. And that'll give investors also a perspective.
No, I think that's a very fair question. Look, we are paying $125 million, around about $125 million, subject to some adjustments. For a business that for the trailing 12 months is probably going to generate a little more than $11 million of EBITDA. So that's the multiple. It's a little more than 11 times EBITDA, which we believe is a fair value to pay. I don't think we are underpaying or we are getting we are overpaying. So I think it's about the right to play, multiple to pay.
Times EBITDA. Okay, point taken. Ankush, let me come to you. And let me expand the question a little bit. What does this do for you globally, and what are your aspirations from a global perspective? What are geographies, targets? Where is it that are pockets that you all are targeting, which are low-hanging fruit, if I can call it?
So, good afternoon, Harsh. So for us, I think our vision is obviously to be a leading global distribution platform. And I think as we are moving forward, the approach is absolutely for us, not any geographic centric or agnostic. But the fact is certain markets for us are today matured, such as Middle East and India. But I think we will be focusing a lot and doubling down in a lot of our sales activity, especially in Europe, and Latin America, followed by Asia Pacific. But obviously now, as Gaurav mentioned, US becomes a very, very important market, and being the number one travel market in the world, I think we are very well placed now with classifications. And for us, I think the overall theme of outbound travel is beautifully growing in both in all developed as well as developing economies. So I think as TBO, we are winning somewhere already, and we will win, as we continue to move forward across the world in meaningful travel economies.
Okay, point taken. Also, give us a lens into how many acquisitions are you targeting? Is there a geography? Is there a target market which you would like to venture in immediately, FY26? Because you still continue to sit on cash, Ankush.
Fair question, Harsh, but the fact is, this acquisition, what we did last week, is anyway a very large acquisition.
Sure.
Or at least for the time being, short and medium term, I think let's settle down and ensure that we integrate as we plan, setting up the integration with TBO and Classic in America. And then obviously start looking at other opportunities, and as I said, we are not geographic agnostic. We are open to all meaningful companies which might be adding a lot of value to the core theme of TBO Tech. But I think for the time being,
बहुत फायदा होगा. सरकार ने भागलपुर, दुमका, रामपुर हाट रेल लाइन के दोहरीकरण को भी मंजूरी दे दी है. साथियों, देश के विकास के लिए बिहार का विकास जरूरी है, और बिहार के विकास के लिए पूर्णिया और सीमांचल का विकास जरूरी है. आरजेडी और कांग्रेस की सरकारों के कुशासन का बहुत बड़ा नुकसान इसी क्षेत्र को उठाना पड़ा है. लेकिन अब एनडीए सरकार स्थिति बदल रही है. अब ये क्षेत्र विकास के फोकस में है. साथियों, बिजली के क्षेत्र में भी बिहार को आत्मनिर्भर बनाने का काम चल रहा है. यहां भागलपुर की पीरपैंती में 2400 मेगावाट के थर्मल पावर प्रोजेक्ट का शिलान्यास किया गया है. साथियों, बिहार की डबल इंजन की सरकार यहां के किसानों और पशुपालकों की आय बढ़ाने के लिए प्रतिबद्ध है. आज कोसी मेची इंट्रा स्टेट रिवर लिंक प्रोजेक्ट के पहले फेज का शिलान्यास भी हुआ है. इसे ईस्टर्न कोसी मैन कैनाल का विस्तार होगा. इससे लाखों हेक्टेयर भूमि की सिंचाई में सुविधा होगी और बाढ़ की चुनौती से निपटने में भी आसानी होगी. साथियों, बिहार के किसानों के पास आय का एक साधन मखाने की खेती भी रहा है. लेकिन पिछली सरकारों ने मखाने की भी उपेक्षा की और मखाना किसानों की भी उपेक्षा की. और मैं दावे से कहता हूं, ये जो आजकल यहां आकर के चक्कर काटते हैं ना, उन्होंने मेरे आने से पहले मखाना का नाम भी नहीं सुना होगा. ये हमारी सरकार है जिसने मखाना को प्राथमिकता दी है. साथियों, मैंने बिहार के आप लोगों से राष्ट्रीय मखाना बोर्ड के गठन का वायदा किया था. केंद्र सरकार ने कल ही राष्ट्रीय मखाना बोर्ड की स्थापना के लिए नोटिफिकेशन जारी कर दिया है. मखाना किसानों को मखाने की अच्छी कीमत मिले, टेक्नोलॉजी का इस्तेमाल बढ़ाया जाएगा. राष्ट्रीय मखाना बोर्ड इसके लिए निरंतर काम करेगा. मखाना सेक्टर के विकास के लिए हमारी सरकार ने करीब 550 करोड़ रुपए की योजना को मंजूर किया है. साथियों, बिहार के विकास की ये गति, बिहार की प्रगति कुछ लोगों को रास नहीं आ रही है. जिन लोगों ने दशकों तक बिहार का शोषण किया, इस मिट्टी को धोखा दिया, आज वो ये मानने को तैयारी नहीं कि बिहार भी नए कीर्तिमान बना सकता है. आप देखिए, बिहार के हर क्षेत्र में हजारों करोड़ रुपए के डेवलपमेंट प्रोजेक्ट पर काम चल रहा है। बिहार के राजगीर में हॉकी का एशिया कप जैसा बड़ा आयोजन हुआ। ओटा सिमरिया पुल जैसे ऐतिहासिक निर्माण कार्य बिहार में हुए। मेड इन बिहार रेल इंजन अफ्रीका तक एक्सपोर्ट होकर जा रहा है, लेकिन ये सब कांग्रेस और आरजेडी वालों को पच नहीं रहा है। बिहार जब भी आगे बढ़ता है, ये लोग बिहार का अपमान करने में जुट जाते हैं। अभी आपने देखा होगा, आरजेडी की सहयोगी कांग्रेस पार्टी सोशल मीडिया पर बिहार की तुलना बीड़ी से कर रही है। इन लोगों को बिहार से इतनी नफरत है, इन लोगों ने घोटाले और भ्रष्टाचार करके बिहार की साख को बहुत नुकसान पहुंचाया। अब बिहार को विकास करते देखकर कांग्रेस आरजेडी ने फिर बिहार को बदनाम करने की ठाल ली है। भाइयों बहनों, ऐसी मानसिकता वाले लोग कभी बिहार का भला नहीं कर सकते। जिन लोगों को अपनी तिजोरी भरने की चिंता रही हो, वो गरीब के घर की चिंता क्यों करें? कांग्रेस के एक प्रधानमंत्री ने माना था कि कांग्रेस सरकार 100 पैसा भेजती है, 100 रुपये, तो 85 पैसा बीच में ही लूट जाता है। आप मुझे बताइए, कांग्रेस आरजेडी की सरकार में सीधे गरीब के खाते में पैसे आ पाते थे। लालटेन जला करके वो पंजाब पैसों को हाथ मारता था और 85 पैसे मार लेते थे। कोरोना के बाद से ही हर गरीब को मुफ्त राशन मिल रहा है। क्या कांग्रेस आरजेडी की सरकार में आपको मुफ्त अनाज मिल पाता क्या? आज आयुष्मान योजना की वजह से हर गरीब को 5 लाख रुपए तक मुफ्त इलाज की सुविधा है। जिन लोगों ने आपके लिए अस्पताल तक नहीं बनवाए, वो आपको मुफ्त इलाज की सुविधा, मैं आपसे पूछना चाहता हूं, क्या ये मुफ्त इलाज की सुविधा दे पाते क्या? आपकी चिंता कर सकते क्या? साथियों, कांग्रेस और आरजेडी ने न केवल बिहार के सम्मान को खतरा है, बल्कि बिहार की पहचान को भी खतरा है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Your Money Matters. I'm Mahima Vachrajani here at NDTV Profit. Now, today the very important thing to keep in mind is about your income tax returns. Today is the deadline to file your income tax returns, and this is applicable to individuals and HUFs who are not subject to tax audit. So keep that in mind. So if you are an individual or an HUF who is not subject to tax audit, today 12 a.m. will be the last deadline to file your income tax returns. Now, with regards to how easy it is to file your ITR, of course, you have to go to the income tax portal using your PAN and password. You log in, you navigate through the ITR filing section, select the assessment year, choose the filing status, pick the right ITR form. This is very important. Keep that in mind. If you're confused, always go to a professional. Review and confirm your information. If there's a tax due, pay that, or if there is a refund, then the next course of action for you should be e-verify your return. This is very important. If you don't e-verify your return will be considered as invalid. So do keep in mind that after filing your return, you have e-verified it. Now, what happens if you miss the deadline? Of course, a belated return can be filed with a penalty and a fee as well going forward. And if you've made any mistakes in ITR that you've already filed, you can also file an updated one. Now, with regards to this entire conversation, to discuss as to what should one keep in mind before filing their ITR, we're joined by Amarpal Chadha, who's a tax partner at EVA India, joining us now. Mr. Chadha, hi. Pleasure speaking with you. My first question to you is that, the expectation now for sure is that CBDT is not going to extend the deadline for filing your taxes. I'll start with a very basic question. What are the key things to keep in mind as an individual, a salaried individual, before filing your taxes?
Sure. And Mahima, just before I start, I think you perfectly captured the whole system of normal time filing, belated filing, and updated return. I think that's bare minimum that everybody should know, that what are the clauses. In terms of what you should be careful, see, typically people say just look at the Form 26AS or look at the AIS. If you are a employee who's earning salary, look at the Form 16. Those are basic documents. If you have rental income, look at your lease deed, look at what kind of income or TDS has been deducted. If you have capital gains, look at the documentation underlying. I think I'll add one more layer to that, which would really help the taxpayers, is to look at your bank statement. Look at all the credits, and I'm not worried about debits. I'm sure you have enough control on your debits, but all income credits into your bank account, every credit should have an explanation. It's very difficult to sit at the end of the year, and now we are 6 months down the year of the closure also. So going back 15, 18 months and remembering, but I think that's the basic thing. If you can explain every credit in your return, whether that's an exempt income, whether it's a gift from somebody, whether it's just a transfer or a refund of your Amazon purchase, you should know every credit in your bank statement. And a simple tip to do that is have an Excel sheet and just keep a record of at least credits above a certain amount into your bank statement. I've seen people struggling with that one once the notice comes. I'm a longer answer, but I just wanted to bring that perspective.
No, and that is very important, Mr. Chadha, because, when I was also filing my ITR, when I got to the AIS portal, I realized that as to very small amounts of TDS were deducted on, maybe income received from REITs or something like that. But it is very important to have that check as well, right? So that's a very important piece of information that Mr. Chadha just gave. Apart from that, I think there are very common mistakes that a person generally makes while filing his or her ITR if they're filing by themselves. What are these mistakes that you generally see, and how can one keep in mind so that they don't get any notices?
Yeah, I think 2-3 very simple ones. One, if you have stock options and if you are working in an MNC, those stock options or shares of a foreign company are foreign assets, which require a separate disclosure. There is a requirement to disclose transactions which are done overseas. So all of that, there is also now, if you know, there is a deduction on tax collection at source when you spend overseas. So look at not only income. I think that's generally what I see. People forget about other things that are required to be reported in the return. The second aspect could be if you are married and you have joint income, joint accounts, who's disclosing what? I've seen friends who have properties in both names. Both have paid some money, but one is offering the income to tax because one is in the lower tax slab. All this is like recipe to get into trouble. So my suggestion is to look at each of your income streams, see whose hand it should be taxed in. And the third could be also around clubbing of income. So if you have children, they are earning income, you've opened their bank accounts, and you're not paying tax on that, all of that can get you in trouble. You need to track the bank accounts. Obviously, there is a threshold limit below which all income is not taxable. But the fact that there are clubbing provisions for transfer of income to children, to wife, to other relatives, you have to be careful of all of that. So hence, don't simply say I have income that's coming in my Form 26AS, in my AIS, and I'll stick to it. I know, Mahima, we all love it when we log into the income tax website, see the income there, just click file the return. That's the easiest thing to do, isn't it?
Absolutely, absolutely. And, keeping that in mind, the other aspect that, I was reading a headline recently that around 1,300 crore worth of fake donation deductions were detected by the IT department. So I think your message to the viewers will be very important, because there are a lot of salaried individuals out there who are going ahead and filing deductions under that 80GGC section when they've actually not made the donation, or probably not in the right channel as well. Your view with regards to this?
Yeah, so any exemption, whether it's donation, whether it's an HRA, which is actually not being paid, but just being transferred to a parent, there is no lease deed behind it. All of those, I would say, first, principally, you should not be doing it. If you have been doing it in the past, I think time is over. There is enough systems, technology, databases available now to track end utilization of the funds, and whether the income is being offered to tax by the other recipient of those amounts or not, through tax returns, through the interlock with the banks, reporting transactions. So for your own safety, I would say just stop any of this that you see. I feel if you've done that in the past years, you make a fresh beginning. It's not possible, one, principally, and second, by system now to do any of these things. I would encourage you not to go this path, because it will lead you to a lot of anxiety and trouble for future.
And correct me if I'm wrong here. Now the income tax department also has softwares which detect these kind of fake deductions claimed or mistakes made. Is that correct?
You are correct. And also, Mahima, you and me may know of some softwares which are available. I'm sure if somebody is checking, they would have some tricks up the sleeve too. So
absolutely, that's correct. The other aspect, Mr. Chadda, is because the Gen Z today, or the new generation, is going ahead and investing or trading in the digital assets, cryptocurrencies per se. Anything that you would want to tell them with regards to what should be kept in mind while filing your ITRs on gains which have been made on cryptocurrency or trading of digital assets?
I think there are specific columns for disclosure of virtual digital assets. Please use those. Please report the right income. Also, sometimes it's very difficult to even know whether you have income or not. So please look at your statement at the year end and see, like your stock statement, see if you've made any switches, if you've sold any of them, converted to others, and see the net gains. It all needs to be reported, no exceptions. Anyway, virtual digital assets is an evolving field with our tax laws also. So reporting considerations, and anyway, at the first stage, investing in a crypto is a personal call to be made with knowledge. And I think there are enough measures being taken to educate investors on the whole virtual digital assets. So keep all of that in mind. And if you are dealing with crypto or any virtual such assets, there are more in the pipeline, be careful that there is a reporting requirement. You may not make enough gains, but if you miss reporting them, you will end up paying interest, taxes, also have some level of penalties coming your way, and the hassle of reporting, replying back. So please weigh in all of these decisions when you make any investment.
Okay. Mr. Chadda, one last question to you with regards to where penalties stand. If one fails to file their ITR today, what is the penalty that we are looking at, and of course timelines for a belated return?
Yeah, so the timeline now, if you don't do it today, you can do it till 31st December 2025. Okay. So you have additional months to do it. If your income is above 5 lakhs, the fee that is you need to pay is 5,000 rupees. So it's only 5,000 rupees if that amount seems okay to you. If your income is below 5 lakhs, then it is 1,000 rupees. So you still have time. It's not that this is the death knell and after this you can't revise your return or you can't file a belated. You can always file a belated. You will also get an opportunity to update a return. But there, the plenties are much higher because those are computed based on tax payable.
Okay.
So if you forget to file and you use the updated window, which is available for next 2 years from the end of the assessment year, but those come with a huge penalty. So my suggestion would be it's either now, today, or take a call of 5,000 or 1,000 rupees and file before 31st December.
And there are certain caveats as well, right? If you file a belated returns, you will not be able to do certain things that you were allowed to do in the timeline specifically. What are those items?
Typically, it's about losses because the losses cannot be carried forward. Only there are certain exceptions like a house property loss which you can carry forward, but other losses lapse. So if you are planning to file a loss return, you have a huge capital gains loss or you sold a property, you're sitting on a big loss, all of those you should do before 15 September. See, anyway, Mahima, all this discussion about last date, we knew from April 1 we have to file this. Yes, there are technology problems. There are other, some people have also told that due to the current situation on rains and floods in certain areas, there should be exceptions created. But again, I think the onus lies on the individual. We cannot for sure say that nobody is in a situation that they can't file a return. There will always be exceptions.
Absolutely, Mr. Chadha. And that sums it up well. Thank you so much for taking out the time and speaking with us at NDTV Profit and giving us those insights with regards to where ITR is concerned.
You're most welcome, Mahima. Thank you.
Okay, viewers, the other topic that we're going to discuss today on Your Money Matters is going to be about Mirae Asset NYSE FANG Plus ETF. Now, this is an interesting one because if you go ahead and invest in this ETF, it is going to give you exposure to global markets. And to discuss about this particular ETF and as to how you should strategize your investment and maybe use this ETF to probably enter into global markets or maybe diversify your portfolio, we are joined by Rishabh Desai, who's the founder of Rupee with Rishabh Investment Services, joining us now. Rishabh, hi, always a pleasure speaking with you. My first question to you is, let's give viewer a perspective as to what this ETF is exactly. What are the kind of companies that will fall under this, and how much of a global exposure will an investor sitting in India get through this?
Hi, Mahima. First of all, thanks so much for having me on the show. As you correctly pointed out that this particular product, invests in the overseas market, predominantly the US market. Now, this is a passive product which gives investors international exposure in the US market. This is number one. Number two, this product mostly invests in the technology and internet companies. Number three, this product is a very concentrated product and which consists of only 10 companies with equal allocation. So this product is not going to be a well diversified like a flexi cap fund or a multi-cap fund, which consists of probably say 30, 40, 50 stocks or so. This product is going to be very concentrated and only limited to 10 companies itself. Now, the beauty of this product is since it's a passive product, it has a back-tested, fantastic track record and has managed to deliver superior returns over the longer period of time. Now, coming to the constituents of the underlying portfolio, now this particular product invests in giant technology and internet companies like Netflix, Alphabet, Amazon, Meta, Microsoft, Nvidia, Apple, so on and so forth. So this particular product is going to invest in not only like international companies which is based in US, but these companies have massive global presence in different continents and different countries throughout the world.
Okay. Rishabh, you were talking about the percentage of exposure in different companies. That is as of what date?
This is as of 29th of August,
okay.
2025.
29th of August, 2025. Okay. Okay. Rishabh, in terms of, this particular fund, it mainly focuses on IT companies, right? So the concentration is very high when it comes to your exposure in IT companies that are situated in the US. Considering that and keeping that in mind, do you think that more than, let's say, 5% of your portfolio should be allocated to something like this fund?
Mahima, first of all, let's understand that which kind of investors would be suitable for this product.
Right.
Now, in my humble opinion, see, aggressive investors, long-term investors who are looking to take some kind of global exposure, who understands the global market, I think that is the kind of investors one should be looking at to invest in this kind of product. Now, someone who does not have that much of patience or that much of understanding of the international markets, because see, one needs to also understand, say, if you buy this product at the wrong time at the wrong price, then of course it's not going to be fruitful for you in terms of returns. So I feel if one is investing in this product needs to be really timed well, so that investor can get the returns what they are wanting. Investors can get the double-digit superior risk-adjusted returns. Okay, so I think investors looking to take global exposure, one can look at this product, because this product is investing in only 10 technology and internet companies, and which has proven to be fantastic in terms of delivering returns over the period of 3, 5, and 10 years.
Okay, all right. With regards to, just want to understand that if somebody is going ahead and buying this ETF, first of all, let's help them understand as to how they can go ahead and buy this. It should be, of course, as easy as just going on a brokerage platform and buying it. But considering that, should this be a one-time investment that you make in this ETF, or would you suggest an SIP? What should be the course of action?
Mahima, first of all, see, unfortunately, this particular product is not taking fresh investments. See, when you go and buy an ETF, you can always buy the ETF on the secondary market, which is traded on the National Stock Exchange. Okay, but in terms of going and buying it from the mutual fund house directly, it's not allowing fresh investments, because RBI has capped or restricted investments going abroad, and unfortunately the limit is completely exhausted in most of the funds, most of the overseas and international funds in the mutual fund space. Now, if someone wants to buy this product, then the only way to buy the ETF is to go to the stock exchange online and buy it. Now, the reason why I'm not recommending investors to buy this product right now, there are two specific reasons why. See, one is that this ETF is trading at a very high premium to its INAV. Okay, it's trading actually 20% premium to its current value, what it actually should be. Okay, and number two, the valuations of all of these companies, all of these 10 companies are trading very high. So if you actually go to see from a returns point of view, as on 29th of August 2025, see, 1 year returns of this particular product has been around 67%. 2-year returns has been 58% CAGR. 1 year is absolute. 2-year is CAGR, which is 58%, and 3-year returns, again, CAGR returns is 53%. So 53% CAGR is mind-boggling, Mahima. So number one is that the ETF is trading at 20% premium, and number two, the valuations of the underlying companies are also trading at very high premium. So these are the two specific reasons why I feel that investors should not go out and venture in this product, at least at this point of time.
Yeah, and okay, so apart from this then, if one wants to have an exposure to the global markets, what should be the course of action for that particular investor?
See, at least at this point of time, just stay patient, just stay put, right? When the valuations turn reasonable and when the premiums come down, I think that is the right time to get into it. See, if one is doing an SIP, that's different. There are very few AMCs who would still be taking SIPs, but in terms of lump sum investment, I am definitely not encouraging investors to invest lump sum money in the US market. So just stay put. When you see a good dip, in this product, when you see valuations correcting, premiums coming down, that is the right time to venture in this product in the US market. And again, coming to your the point that how much should investors take exposure in the global markets or in the US markets, I think anywhere between 10 to 25% of allocation in one's core portfolio should be very healthy.
Okay, and overall, considering that this is a global fund, any difference in terms of tax implication, if you're aware?
No, the taxation would be as similar as what it is in India. long-term and short-term capital gain tax remains the same. There is no special taxation for international funds.
And in terms of we talked about this as to how this is concentrated in one particular sector only. Given a chance, would you go ahead and invest in something like a Miraset right now, or maybe play the IT theme and go for something that has more concentration in Indian IT firms, considering the Fed rate also coming in? Fed rate cut is expected this week.
Okay, so I usually don't recommend investors to venture into sectorial funds, especially in India. I think if someone wants to take IT bets in India, then going via flexi-cap funds, multi-cap funds, focus funds, or any other mutual funds via mid-cap, small caps, I think that is the wise thing to do, and let the fund manager do its job of how much exposure he or she wants to take into IT at this point of time. But, because these are giant companies, especially the FANG Plus portfolio is a very mouth-watering portfolio, and the earnings have also been phenomenal. The returns, there is no doubt, has been phenomenal, but the earnings have also been phenomenal of these companies. So I feel I'm very comfortable taking this kind of thematic bet, because it goes out of the geography, out of the Indian geography, and is venturing in the US markets. See, I tell this to all of my clients that some global exposure is very important. See, when we talk about diversification, it has to be from a holistic point of view. So it has to be from a fund level, it has to be at a category level, diversification has to be at an asset allocation level, diversification has to be from an AMC level, style level, and at the same time, diversification also needs to be from a geographical level as well. So I think US has been very consistent in delivering returns, and the returns what I just spoke about, I mean, like 1 year returns has been 67 and the 3-year CAGR returns has been 53% CAGR. So I mean, the track record is definitely proven. These are giant companies having global presence in different continents and different countries. So I'm definitely comfortable venturing in this product, but at the right price and at the right time.
Hey, Rishabh, thank you so much for giving us those insights. And of course, always, thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you so much, Mahima.
All right, the other piece, that you as a retail investor should keep in mind is how buybacks are being taxed, especially because Infosys came out with a buyback of 18,000 crores at a 19% premium. It is very important to understand that if you are holding Infosys in your portfolio and if you are participating in the buyback, what will be the tax implications on you? Harsh joins us with more details on that. Harsh?
The taxability of this is going to hold critical fort if you are an Infosys shareholder and going to opt for buyback. So you really do want to listen to this one. Let's talk about what the law says. Buyback proceeds are taxed as dividend income, not as capital gains. And dividend income, so basically the full 1800 rupees will be taxed as dividend income in your hands. That's the first piece of the law. Company will deduct a 10% of the buyback value as tax deducted at source, and no other tax will be paid by the company. So company is completely exempt. They'll pay out the 1800, but out of that 180 will be deducted as TDS, and thereafter 1620 will be paid out to the shareholder. 180 as TDS will reflect in your account. The tax paid by shareholder at income tax slab rate. So your dividend income, which is coming in at 1800, will be taxed at a slab rate. It could be 0, it could be 10, it could be 20, 30, whatever your slab rate is. That's the key component that you need to find out before you opt for this buyback offer. Capital loss, though, of course, because you've had a purchase price built into the shares that you've opted to give out for buyback, the capital loss can only be set off against other capital gains and not dividend. So you actually have to have gains to ensure that that loss gets offset. That's something you want to understand. Let's break it down into easier numbers. 1800 is your offer price for buyback. TDS deducted will be 180, which will reflect in your account, which is the shareholder's account. The net payout will be 1620 rupees in your account. Now let's talk a little bit about what the tax could be. If it's a 20%, it's 360 rupees on the 1820, and 30%, it's 540 on the 1820. That brings the gains to lesser, or rather the accrued number of profit will likely be lower for some persons if at all you sell it even at market, that could be slightly more sensible as well for some. So you want to take note of that part. Cost of shares to be treated as capital loss, I did mention that, so that's all. And capital loss can be set off, can reduce tax only if you have other capital gains. I want to reiterate that. Last off, most relevant pieces. Shareholder falling in the higher slab rates are disincentivized from opting for this buyback. You still want to do the math with your chartered accountant, but and therefore will be subjected to higher taxation on the full 1,800 rupees upfront. But again, if you have capital gains, that may vary. And cost is to be treated as capital loss and set off against capital gains. That will remain common even for shareholders in a lower income tax slab rate, but they are incentivized because you'll have a far lower rate which could be payable on your total cumulative amount coming in of 1,800 rupees, but you will also get a deduction likely if you have capital gains. So there is of course an incentivization for some of the lower income tax slab rates shareholders, but a disincentivization for some of the higher slab rate shareholders.
All right, Harsh, thank you so much for sharing with us this interesting piece as to how buybacks are in fact taxed. Very helpful to a retail investor for sure. But with that, we're completely out of time on this edition of Your Money Matters. But do stay tuned for more news and updates on the other side.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
My guest today is called the Valuation Guru, and for a reason. I'm speaking to someone who dominates timelines for anyone who's interested in understanding the philosophy of investment. Ashwath Damodaran, thank you so much for speaking to us here at NDTV.
Thank you for having me.
Absolute pleasure to speak with you at a time when everyone in the world, in some way or the other, is trying to figure out what exactly is going on. You wake up to news cycles where everything is all over the place.
I mean, it is a seismic shift. It's a shift from a world that has existed for almost 80 years, right? The post-Second World War world is shifting, and it's been shifting for a while. I think we attribute too much of this to Donald Trump. It's a shift that's been happening since 2008. What held the world together was this global economic order has been under stress. And I think this year you're starting to see that stress play out as actual breaks in the model. I'm not sure what replaces it, but it's a time of uncertainty because you don't know what's coming because everything we do is structured in what we already know. For that, we'll look back at the last century.
Yeah, since you've jumped straight to the big T, let's dive into it. Just over the last couple of days and recently, actually, Trump has posted about India and Russia going into the dark embrace of China. May they all prosper, etc. From an Indian perspective, in the last few months, we've gone from a situation where we thought that a tariff deal would be a shoo-in. Yeah. Definitely will be the first to get there, to a situation where it's become rather bleak. How have you seen that whole wave?
Well, I've watched Donald Trump now through his first presidential, the 4 years and now. And I think the word I would use to describe him is absolutely unpredictable. Right? Normally you can look at a person's history and look at their mindset and say, this is what they're probably going to do. And I think, Donald Trump, it's almost impossible to figure out what that next step is. I mean, he will tell you that is his art of the deal because he's negotiating with people who are so uncertain about what he's going to do next. He gets better deals for himself. He does keep people off balance. I would not want to be negotiating with Donald Trump because I have no idea where he's coming from the next minute. So I think what you're seeing, though, is what he used to do in real estate play out on the global phase, right? And the real estate was another real estate person who probably felt the brunt of this uncertainty. Now you have, leaders of nations feeling the effects of somebody who's completely unpredictable.
You excel at analyzing companies, valuations, stocks. If Trump were a stock, where do you think this is going?
I would say he would, it's a high risk stock. It's an extremely volatile stock. It's a stock it's a Tesla on a global stage because Elon Musk has many of the same things, right? 2 days ago, I was listening to Elon saying that Tesla is really a robotics company. And I said, really? I thought it was an electric car company. But in a sense, he's been able to carry investors with him because he has enough people who seem to say, okay, you're a robotics company. Trump, in a sense, does that on a national stage. He has a group of people who essentially say, okay, that's where you're going. I'll go with you. So if he were a stock, he's a stock with a very strong following. It's like a very loyal customer base, but I have no idea where he's going. He's going to take them wherever he wants to take them, and that's going to be incredibly unpredictable.
So a high-risk stock like Tesla. I love this.
High-risk stock where I don't know what business you're in. You keep changing your mind. Today you're a retail company. Tomorrow you're a manufacturing company because you're effectively whatever you woke up that morning and said you were going to be.
Yeah. So I love this. So I'm going to press on this a little more. If Xi Jinping were a stock, because we're going to talk about Trump and then the Rick of BRICS.
Yeah.
So if Xi Jinping were a stock,
he'd be a very predictable stock in many ways, except if you did things that really get in his way as a company. I mean, I have a sense that he's pretty ruthless about the end game and he will play that end game. And I think that if he were a stock, would be more predictable than Trump. But if you got on his wrong side, God help you, right? He has his own shadows that come with it. I mean, I remember in 2019, we thought the big Chinese tech companies were going to coast, right? Because of the government as their ally. And then one day Beijing called in, Tencent and Alibaba, and said, you guys are too big. And he managed to cut the knees out from the big tech companies because they went from being allies to adversaries essentially overnight. So if he were a stock, if I were on his right side, I'm worrying about, will I end up on the other side? Will I be like Tencent in 2019? So I wouldn't be sleeping on my job because I'd worry about that shift coming. So he's predictable for the most part, unless you're doing something that's not in his larger mission. And if you're doing something that doesn't fit in, you're probably in danger.
So any sort of parallel you can draw with a company?
Kind of company. When I value Amazon, the analogy I draw is the story I tell is it's the Thanos company. I'm an Avengers fan, and Amazon is like Thanos. It's going to get you, the click of the fingers. For me, that's what comes to mind when I think of China collectively and the leadership there. Is this is a very, 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 they have a mission and they're going to get there, and nothing is going to get in their way.
Wow. What about Mr. Putin?
That's an interesting one. Russia doesn't have the power it used to have once, except for its military. But Putin is a survivor, right? It's clearly in Russia, the way you get to the top and stay to the top requires that you cut down your enemies early on. So if he were a stock, who would he be? Maybe some kind of a Chinese martial arts. I'd say he's very good at kind of keeping his enemies close and knocking them down. So, in many ways, he's easier to read because he doesn't hide behind, behind things that make you look polite. Like China, I think, puts out this, we care about the rest of the world. And I think Russia is very clear. We care about Russia. We're going to do whatever we can, even if the rest of the world disagrees. So, a tough one call.
And of course, what about Modi?
It's interesting. He's the lead seller of the India story, and he's done a pretty good job of selling the India story.
So any stock in mind?
The stock in mind, it would have to be a growth story. So it'd have to be Palantir, maybe, so you're selling a growth story. The story has heft, but lots of things have to, so it's still early in the game. So unlike the Amazons of the world where the story's been told, if it were a company, it'd be a growth company. Potential is out there, but lots of other things have to happen for that potential to be delivered in terms of numbers.
Super segue actually to how you've looked at Indian markets, and overvalued has been the very, very short pointer of it. I think you said that earlier in this year. After that, things have been range bound. There's some things India has done. Do you still...
I hope you're not blaming me for it being range bound.
No, I think that goes to Trump and this. I think you'll have to come back in line. You're very well revered, Ashwath, but I don't
think so. I don't think I can move markets.
I don't think you can move markets.
That statement about overvalued was just a statement of fact. It was because I computed the PE ratios for every one at I do it as part of, at the start of every year. I call it, playing Moneyball with the data. I take the data and say, let's see what the data is telling us. And I compute the PE ratio for every country collectively. And India had the highest PE ratio of any country of any magnitude. There are some small countries, but this was a country in a large enough market with. So I said, look, it is the most overvalued market. And of course, it got in the news. And then I got a little bit of backlash saying, what.
No, there's no backlash.
I don't know.
My question is that do you think we're still there? The Indian markets are still as overvalued? Or even more so?
I think they are still overvalued because now you've added a layer of uncertainty you didn't have when I made that statement of a 50% tariff and working your way to what the end game is going to be. So I think they're overvalued, but there's, I think, a reason for that. I think part of the reason the Indian market is overvalued is FOMO. A lot of institutional investors need to be in the next big market, right? Whatever the price is. And their fear is if you're not in the Indian market, you're going to get left behind. So like AI, you need to be in NVIDIA if you're a portfolio manager, or your clients are going to ask, why aren't you in NVIDIA? So a lot of US institutional investors, their clients are saying, hey, what's your India position? They've had a China position because they played that game already. And for many of them, their India position is either non-existent or really small. So that is a big driver. The other is Indians themselves have enough wealth to invest, and really you push them into investing mostly in the Indian market because it's tough to invest outside India. Not impossible. When I was growing up in India, you could not invest outside India. Now you can, but with guardrails and restrictions on what you can do. So the country is getting wealthier. The wealth has no place to go but into Indian stocks. It's almost given that Indian equities are going to get pushed up too much relative to other equities, because that wealth is driving it up. So a combination of FOMO on the part of foreign institutional investors and domestic investors having more money to invest has pushed this market up, not just over the last year, but if you take it over the last 15 or 20 years and you look at the upward motion, it is the driving up with those two forces pushing it up. Now, but that also means that if it's overvalued, there is no catalyst that can cause an immediate correction. It's not like people are going to wake up. Especially domestic investors. Let's say they're said Indian stocks are overvalued. What exactly is the choice? What are you going to do? You're going to buy Indian real estate, which is even more overvalued in many. So there is no easy place for them to put their money where they can say, I can do better.
Having said that, for foreign investors, there seems to be a lot of concern because you have FI investment at a 13-month low. Some of it because of tariffs, etc. Do you see that shifting or reversing because of this FOMO factor?
Foreign institutional investors are the biggest sheep on the face of the earth. You have 2 good weeks in the Indian market. They'll be here really quickly. So I'd love to tell you that they're deep thinkers, that they're going through this process. They're chasing returns. So the only reason they're reluctant now is the returns haven't been good in the last few weeks. You have 6 weeks of good returns. Everything will change. And that's the nature of foreign institutional investing. It moves in, the entire group moves together. That's mood and momentum driving it. And right now, the mood and momentum might be a little down, but it's not out. And if that shifts, they'll shift with it.
You know, we have limited time in this interview, so I want to spend a bulk of it talking about what would be useful for the young Indian investor. A lot of investors right now, retail investors in India, have started their journey in COVID or post-COVID. And they really haven't seen a rocky time, so to speak. A bulk of them, really. There's been an explosion. What would you advise them when they're looking right now and they're hearing, okay, India growth story 10, 15 years, but they're seeing their portfolios shaky?
I'm going to make a statement about investing that people might not like. Investing is about growing and preserving and growing wealth. It's not about getting rich. And unfortunately, I think somewhere along the way, especially with younger investors, and this is not just in India, but across the world, there is this sense of investing is about a way of getting rich quickly. So when you do that, it changes the way you think about investing. Basically, you're looking for long odds. You want to get that, 10 bagger or 100 bagger because that's how you get rich. It's a terrible way to invest because you're searching for the next big one, and there are lots of good investments under you ignore because they're never going to be 10 baggers. So my first advice to young investors is make up your mind. Do you want to invest or do you want to trade? Trading, if you want to get rich, you buy at a low price, you sell at a high price, you chase momentum. That's entirely fine. If you're truly wanting to build an investing long-term record, you got to start by saying, okay, what do I have to invest? How much risk can I take? And then think about doing things incrementally. Build up your investment portfolio so you can preserve and grow that wealth, which means if you have a job, do really well at that job because that's where you get the income to save. So if you're a doctor, don't spend all day checking out the stock pages. Be a doctor, be an engineer, because without that income coming in, you're not building wealth.
Are you saying that investing is not a profession that people should pursue?
It shouldn't be a profession if you have another job, right? If you work for a portfolio manager, it's your profession. But most people who are investing in the market have other jobs on the side, and they tend to invest as part of what they do in the evening or the lunch break. And if you're doing that, that's fine, but take care of what's creating the income that you're then investing to preserve and grow.
So then how do you pick? Right now, there is a primary market boom in India. Everyone has lined up for an IPO, and some very small companies, some very large companies. It's a complete deluge.
Yeah.
How do you pick?
Do you know that 80% of mutual funds in India underperform the index in India?
Mm. Yeah.
Which actually is it's a good place to start, because if you're investing and you want to invest and grow, for most people, the most sensible way to invest and grow is to pick an index fund that has almost no loads, no transactions costs, fees of 0.1% or whatever you're investing, and then go back to living the rest of your life. Think of how much time you save not looking up the next stock, the next IPO. And when you're 85, you can look at your neighbor who's been doing all of those things. And my guess is you'll have more money in your portfolio than your neighbor does.
Having said that, there are people who genuinely enjoy looking at companies, looking at valuation.
That's different. If you enjoy investing, be very clear about why you're investing. You enjoy the process. In fact, today in class, I said, look, I am an active investor. I pick stocks, but I don't expect to be rewarded for doing the right thing. I said, look, if I get to the age of 85 on my deathbed, and my best friend or my worst enemy came to my deathbed and said, look, I've looked at your record over the last 60 years, doing your intrinsic valuation and picking stocks, and you made 9%. But if you'd taken that money and put in an index fund, you'd have made 10% a year. The question I asked my class was, would you be okay if you learned that in your deathbed, that all of the work you were putting, doing your research and picking stocks, you could have avoided and made more by just putting your money in an index fund? And I told him my answer is, I'd be okay with that. I'd be okay with it because I truly enjoy the process of picking stocks. And I follow a very simple rule in investing. And this is a rule that I would also pass on to young investors. The rule in investing is do no harm. Don't do things in investing that can cause catastrophic losses. How will that happen? You take all your money and buy that one stock that everybody says, I don't care how great the hype is. You are putting yourself at risk of losing 30% of your portfolio, 40% of your portfolio. Those are the kinds of mistakes you cannot come back from. So, make up your mind on what you're going to do. Do no harm, and less is more. Less activity over more activity. The more you trade, the worse your odds are of making good returns.
For a lot of companies right now in India, which are great stories, the word is still out on whether it's hype or the next big story, right? Famously,
it doesn't have to be either or, right? It can be both. You can have hype and it can be a real story. The reason hype is so difficult to separate from the story is often hype is based on something real. Let's take AI, right? Is there a lot of hype about AI? Yes. But that hype is built on some very real changes that AI is bringing to businesses and markets. Most hype that sells is often because you take something which at its core is true and then you overdo it, right? So to me, it's not a question of is it hype or is it real? It's real, but the problem is the real part has been exaggerated because you focused in on an aspect of the reality and ignored some of the stuff you should be factoring in, right? So I think that it's, a lot of hype at its core. There is a core story. There is a good story, which is one reason. Hype companies are not bad companies. They can be great companies. They're just priced too high given what they can deliver.
Let me complete my question, which was specifically about, I think you spoke about Zomato when it listed. Look at what's happened with it now. And there are other companies listed. There are others making a beeline in the same space.
What do they call it? Quick commerce?
Quick commerce is what you could call it, or food delivery. They've increased platform fees incessantly with the knowledge and in the comfort of the knowledge that now the demand is inelastic. People are too used to ordering online. Would you revisit that idea? Do you think that there's a lot of hype built in internet-based companies or platform companies?
I think that when I first valued Zomato, I valued it as a restaurant delivery company, right? Which constrains the market. And it's true, right? If I were telling the Zomato story now, it's a bigger story. It's a story of, especially after the Blinkit acquisition, it's really a company that will deliver just about anything to you at home. It's your restaurant meal, your grocery, your maybe even a retail item that you bought. And it's taking advantage of something that is a very real problem in India. Yesterday, I had to go from here to the Regis Hotel to give a talk at 7 o'clock. It took me an hour and 17 minutes to get from here to the Regis Hotel. I mean, we're the infrastructure constraints in the big cities especially mean that, you really cannot get from point A to point B very. So if you get home after a long day and you forgot to pick up your laundry, you can get in your car and drive to the laundry to pick it up, but it's that 10-minute errand will become an hour and a half. India is perfect as a perfect target for a company that says, we will do it for you, because they're arbitraging the fact that your time is worth more to you than some other person who can do that for you at a lower cost. So they have that advantage for them, which is, I think, driving the demand in the market. I think the thing that people might not be factoring in is Zomato, when it was delivering restaurant meals, kept 22% of what you were paying. If they deliver groceries, there is zero chance of being able to keep 22% because a grocer's operating margins are like 6, 8, 10%. It's a low margin, high growth business. And what I wonder whether investors are factoring in, they're excited about the growth you get from going into delivering all this neat stuff. But are they factoring in the coming down of margins that's almost inevitable when you leave these spaces where you can claim 20% of what's paid to places where you might be paid 2 or 3 or 4%?
Do you think that there are more stories like that? Is there anything right now where you see a great story which is not yet tapped in the Indian equity context?
I think the places to look are in healthcare, because I think Indian healthcare is essentially a market we're going to see huge growth, because as people get discretionary. I mean, I grew up in India where there were people who never went to a doctor in their lifetime because they couldn't afford to go to a doctor. Hospitals, you had to drive around the city to find the hospitals. When I was in Chennai, 5 days ago, and you drive down Punamalai High Road, there are 16 hospitals and MRI centers. Clearly, people, as they have discretionary income, are able to spend more money on health. And we know how that plays out. In the US, 20% of the GDP is in healthcare, because as you get more prosperous and you get older, both of those will play out. So I think healthcare spending in India is going to go up. It's almost, the question is who's going to benefit from it, right? And the companies that are out there are trying, the hospitals, you have health insurance companies that are starting to show up. That ecosystem is going to start to see more players. And I'd be very interested in India specific. But right now what we're seeing is players that replicate what you see in the Western markets, right? The insurance companies, the MRI, the diagnostics. But there's probably a version of a healthcare company that is tailored to India, which is going to be very different than the healthcare company you would create for a market like the US. 1 billion, 3 people spread out across a country where income is widely variable. There might be a healthcare model that actually is able to tap into that very different market. I haven't seen one, at least one that is public yet, but I've talked to people who have private healthcare businesses who are tapping into, hey, we're trying to build a healthcare company that's more attuned to Indian healthcare rather than try to replicate what you see in US healthcare. So I'm keeping my eyes open for one of those companies, because I think if you can find that space, that's potentially a 10-bagger, a company that could really do well.
Do you think the GST cuts that have taken place are going to be the game changer for Indian market economy?
Step, right? Because I looked at, when you look at those numbers, you need some rationalization in this policy. There's too much, there are too many variants across different kinds of transactions. So it's not just the lowering, it's more of a standardization where somebody doing business faces more certainty on that dimension than they've done for the last few years, because it was too much, too much uncertainty. But what exactly will that look like by the time I make my end product?
In terms of AI, and this, I think I want to ask this question in 2 aspects. One is, of course, that big Indian AI story. Do you think it's going to come? Is that something you're looking out for? Or do you think we're too far behind where the NVIDIAs of the world have taken a leap?
The AI architecture business is, I think, it's too far gone, right? It's too late to become a chip company to make AI chips. You could try to be the manufacturing hub for a company like NVIDIA, but to try to make the chips yourself and catch up with it, the money is already being spent. You don't have enough of a lead time. But that's the architecture. The AI architecture, though, is being spent because you expect AI products and services to come out of the space that people pay money for. Right now, I can't think of a single company making money on AI products and services.
Globally,
right? Because, they talk about it. Almost everything I have has some AI play on it, right? And I'm Zoom, there's this little AI button. I'm not even sure what it does. When I have email on Apple, they have an app. But my reaction with all of this AI stuff that I'm seeing is it's neat, but I'm not paying $10 a month or $5 a month for it. And for many of the consumer directed AI products, I'm not sure there's enough of a market. There'll be lots of people using AI, but there's not a lot of revenue there because I'm not sure how much I think there is play in the B2B AI market. And I think it'll take work. It'll take work to bring together the combination of computing power and data. The company that I think is closest to monetizing it is a company like Palantir, right? It's got the computing power, it's got the data, it's got the clients who need that combination. So I think right now people are investing in the AI architecture, expecting the AI product and service market to be huge. 4 trillion. That's the only way you can justify investing $500 billion in the architecture. And I think that product and service market is still wide open. We don't know who the winners and losers are. So if I were India looking at the AI space, I'm looking at that end of the AI space, not the architecture. Building more data centers is not how you make money. It's the products and services that come from AI.
Thank you so much, Ashpit, for speaking with us. It's been an absolute pleasure.
Thank you.
Thank you.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Good evening. You're watching The Big Question on NDTV Profit. I'm Vikram Oza. Now, IPOs, they've always been India's favorite stock market carnival. You see flashy valuations, you see sky-high hype, and there are millions of investors queuing up for their slice of the next big stock. But now, SEBI is proposing to change the rules of the game. The rules change now could mean big relief for India's biggest listed companies. SEBI is proposing easier rules on minimum public shareholding. And that means they're extending the compliance window from 3 years to 5 years for firms with a market cap of anywhere between 50,000 crore rupees and 1 lakh crore rupees. So in this new roadmap, you get 15% public float within 5 years and 25% within 10 years of listing. The aim seems to be simple. It is to simplify fundraising, to reduce that pressure of large-scale equity dilution when it happens in a rush, which often puts a drag on the share prices. What it could also do is encourage more mega listings in the future. But now the question is, how investor-friendly are these norms? When you scratch the surface, there are chances that you'll see founders smiling a lot wider than small investors. Remember, a mega Reliance Jio listing is in the works, so is an NSE. So for such mega companies, the minimum public float has been cut now to just 2.5%. That's half of what it used to be. The timeline to bring promoters down to 25%, now like I mentioned, that has been stretched as well. It is 5 years for most large firms and up to 10 years for the really big ones. So what does this really mean for investors? Fewer shares on offer could mean inflated valuations. It could also mean tighter supply. And the odds seem to be rising of getting allotment as well. So for promoters, it means more control for a longer period of time. And now as the hype around the urban company IPO shows us, the question seems to be rather timely. And the question is this: do these changes protect the small investor, or do they power the big founders even more? And that is really a big question tonight on NDTV Profit. And to debate it, I have a terrific panel with us on the show. Market expert Ajay Bagga is with us, along with former Executive Director of SEBI, J.N. Gupta. Also with us on this debate is Narendra Solanki, the Head of Fundamental Research in Investment Services at Anant Raj Shares and Stockbrokers. Great to have you with us, gentlemen. A very good evening. Narendra Solanki, first to you.
Good evening.
SEBI is saying that the new norms make Indian IPOs more attractive to global capital. But from where you are sitting, does lowering this dilution, the kind of requirements for dilution, do they make IPOs riskier, more expensive for small investors?
Yeah, good evening to you, Vikram, and good evening to all the panelists. I think it's a welcome move, and I don't see it as a risk, but if you see largely on a yearly basis, we have a pipeline of around 50,000 to maybe 1 lakh, 1,25,000 crore of IPOs. So in any good year, we cross that 1 lakh mark, and in not so good year, we are hovering at about 50 to 60,000 crore. And now if you see the pending pipeline of the IPOs, which the SEBI has already approved, it hovers at around 1,60,000 somewhere crore. So that's a huge pipeline, and I think this actually gives market a kind of a breather in terms of absorbing this huge pipeline. So this dilution, this relaxation in the dilution addresses one of these situations. Plus, if you look at another point, especially post-COVID, we have seen a lot of new age and new tech businesses coming up around, and they have not been able to find representations in the listed market space, and a lot of unlisted trading activity has also been happening, which is much riskier and much and also not transparent for the retail investors. So I think it addresses that problem as well, and we can see a lot of unlisted businesses also trying to go for a listing in the early stages.
Right.
So I think it addresses 2-3 critical issues for the market. And one more important thing would be coming out with this is that
with the increase in the anchor share also, the long-term investors would be having a much wider hold on the subscription of the IPO, so which reduces the volatility as well post-listing, which generally we see during the early trading days of the listings, wherein we see volatility of more than 10% for some of the IPOs. So that also addresses the liquidity issues. Now, coming to another factor regarding the participation and riskiness of the retail investors, because the free float would be very low, so I don't think these companies would be able to find any participation in broader market indices so soon. So from that ETF index-based ETF flow perspective, I think it would be they won't be finding any broader participation from that point of view. So only a direct retail participation or a mutual fund bet would be the choice for whoever wants to invest in these kind of stocks.
Right.
So I think this also insulates from that perspective.
So at least 3-4 counts, as you are pointing out, Mr. Solanki, there are those benefits that accrue to the markets at large, whether it's the absorption of really big IPOs or whether you're talking about liquidity. Mr. Gupta, you tell me if you agree with this or not, because there has to be a regulatory intent in the kind of proposals that are coming out of SEBI. Is this about boosting India's competitiveness against global markets, or do you think there is pressure from large corporates who are looking at slightly easier entry with the kind of IPOs that they've got?
Good evening, panelists. I would say the lawmaking is just like Rubik's Cube. You can't solve it in first attempt.
Right.
So every time you make law, the other side will change the color, and so you will not be having a full solution. So every attempt of SEBI will have pros and cons.
Right.
And everybody will say SEBI has succumbed to this pressure or that pressure. So let me assure you, SEBI would not succumb to pressure. SEBI will always go in a balanced way. Now, the issue is when you say the promoters are or founders or something, but it's becoming stronger. Now, I would say any investor would not want a weak promoter, because when you have a weak promoter or weak controller, the risk is much higher.
Okay.
The other issue is this: I don't buy the idea that since many IPOs are in pipeline, so you have to do it, because none of us has got the estimate that how much is the investor sitting on the money, how much they will bring to the market. So we don't know. So we say that capacity is 1 lakh crore or 2 lakh crore. We could be absolutely wrong. It could be 10 lakhs crore, or it could be 50,000 crore. We don't know.
Sure.
The third issue is that the problem arises when IPOs are bunched. So if a big IPO is bunched with a 5 or 6 small IPO,
yes,
then it could be a pressure that the bigger IPO, because of the bigger name, will overshadow the smaller IPO.
Exactly.
The third point is this: ultimately, whom we are protecting. The idea of regulator is to protect the market. Right. And who are the participants in the market? It's my investors, brokers, promoters, everybody.
Okay.
Now, what happens if you bring lot of supply in the market? Say, for example, today tomatoes are selling for 50 rupees a kg. Suppose tomorrow in the market 10 tons of tomatoes are dumped. It will not sell for 40, 50 rupees a kg.
Right.
So the issue is very simply, if you do more supply, the price, and the promoters, why they should, if they value the thing at X amount, why? Because of the supply issue they should do it. So ultimately, idea is that the liquidity should be there. And liquidity does not come by the percentage. Liquidity comes by the
doesn't it
number
make
of
price discovery that much more difficult, Mr. Gupta?
Yeah. So then I'm saying it will be fair price discovery. The only issue that remains is that what are the consequential effect of that thing? One of the big consequential impact is that you have a section 100 or 106 in the Companies Act, which is minority protection, which says the minimum 10% of the shareholders are required to approach any court of law or any regulator.
Right.
Now, when you have only 5% stock in the listed space, then where the hell you find the 10%? So similarly, we will have to look into all other related laws which are impacted by this and take care of that.
Right.
It can't happen that you settle the 1 lakh, but you don't settle the other leg. You have to make the both leg equal.
So you need
otherwise
to
you will not.
create that balance. When you're creating new norms, you need to create that balance as well. It's an important piece. All the points that you're putting out there, Mr. Gupta, are well taken. Mr. Bagga, I want to ask you if you agree with what is being spelled out. For retail investors who are watching tonight, I'm wondering whether the new norms mean fewer allotments, whether it could mean higher pricing where valuations, there are question marks, and maybe a rougher deal at IPO time for investors in general when you have these supply kind of constraints, if you can call them that.
Yeah, it's a difficult one. As Gupta ji mentioned, there are pros and cons, and Mr. Solanki laid out very clearly the pros. I would say what worries me in this scenario, one, I mean, it's going towards the US market where irrespective of the market cap, the regulator only lays down that minimum this much should be the public float in terms of dollar billions. And they are quite okay with after that, whatever the companies are doing. If you look at Asian countries, mostly they have transitioned, moved towards 25%. The EU prefers 25%. Germans give 10% in some scenarios. I have handled issues like that. But mostly they would prefer 25% free float. Your market does not get ranked very highly if you don't have too much free float. That is another issue which we have faced in India. Your MSCI rankings, ratings won't come.
Right.
Second, what will happen with something like this? For 10 years, there will always be the sword of dilution sitting on customers' heads. So whenever the promoter sells, it's only in India that an OFS comes in and the stocks go up. Otherwise, it's a red light for anybody, a red light marker for markets if the promoter is selling. Here, promoters will keep selling for 10 years and substantial amounts because fully they will also be growing at 15% per annum. So imagine over 10 years to sell out another 22.5%. At compounding at 15%, how much of supply that will bring. So I'm not sure this is the best idea. I don't know about the governance, what Gupta ji mentioned already in terms of minority shareholder protection, Vikram. I think those are some of the markers that stand out in this proposed legislation.
And also I wanted to bring up that point that Mr. Solanki did from a startup ecosystem as well, Mr. Bagga. Do you see this as a genuine enabler of entrepreneurship, or do you think these rules are more about pleasing the unicorns rather than supporting the broader startup ecosystem? Because we are at that pivotal point, aren't we?
Yeah, the startups should not be waiting for 5 lakh crore kind of valuations, $50 billion valuations and then coming public. Exactly. What I would think. Mostly we should have a good SME exchange which is doing fair price, and they come under the $50,000 or 50,000 crores or 1 lakh crore kind of at most, at a stretch. These are the mega corps which will be hived off from companies or government companies which are legacy companies coming in. You won't have many new companies which have trundled along and stayed private. And then at 5 lakh crore, they decide that I want to enter the market. So that's why the media is talking that is it appeasement of certain segments or certain corporates that is happening through this.
In fact,
that definitely comes up.
Indeed. So, Mr. Solanki, on that very point, I mean, we've seen massive IPO oversubscriptions in recent times. Urban Company comes to mind and Ola Electric in the past. I'm just wondering if these lower floats risk creating some kind of artificial scarcity effect that could possibly distort valuations. Do you see that happening?
See, as far as oversubscription is concerned, definitely that we can continue to see. And oversubscription generally hinges on the leverage effect, which we generally see in the markets during the IPOs, wherein a lot of people actually take a certain amount of leverage and try to get their chances of allotment higher because by using that. So that is that is one of the risks that we may face in the current situation where the supply is lower. But I think we have to see when a large company which is coming out with a IPO of say around 15 to 20,000 crore. So I think I don't think that there we can see that amount of lower allotments coming in that kind of an issue.
Fair enough. But Mr. Gupta, on that point of governance safeguards that Mr. Bagga was alluding to, these new rules, whether they are the lock-in rules, whether they are the disclosures, the governance safeguards, you think they balance out the risks that may be there for small investors, or do you think that SEBI has tilted the scales a little bit?
See, let us understand what are the sources of risk in a listed stock. In a listed stock, the biggest risk is market manipulation. The manipulation is possible only when the floating stock is low. Here it is a question, we are saying the floating stock is so big that it is not possible for a company to make the issue. So number of shares that are there are very high. What we have to guard is this: the number of shares should not be distributed into 10 or 20 people that they have whatever is in the public domain, they command 90% of that share and they keep on manipulating. But even if they are doing it, SEBI has got sufficient system to catch that. The risk comes from that. The other risk comes is because if you have got 95% holding, then the special resolution that is passed in the company with a 75% majority loses its relevance. So SEBI will have to work out in such a manner that if you are doing the public float, so whatever is public float should become equal to more than 25%. And the voting power of promoters or founders, whatever it may be, should be balanced in such a way that 3:1 ratio is maintained.
Right.
So that special resolution can be defeated.
So you're saying only if that happens, then this is likely to work in a balanced kind of way. Mr. Bagga, what do you make of that? Often we hear founders arguing that they should not be forced to give up too much equity too soon. But you think retail investors are paying for that kind of comfort that founders are likely to enjoy now?
Look at global companies, there are no promoters. Or within India also, some of the largest institutions, there are no promoters. And they are very well run. They are board-run companies with management appointed by boards. So, this is something that Indian promoters always do, that they hang on to as much as they can for as long as they can. They want the listing. They want to get the currency from the listing. But then they don't want to dilute down, and they will take the regulator to court. They will cite COVID and this and that happening. That makes the retail investor ultimately lose out, because unless your free float is there, that stock will not get into global indices, will not get that ranking. And as market also, we suffer then, because we are very low on free float with respect to our size. We are a top 5 market, but we don't have the free float to really justify. And that's why we don't get our rankings in the global rankings. Right. That's what promoters have to understand, that it's not that either you then stay private, but if you want to come public, you have to have enough free float. And as Mr. Solanki was mentioning, the institutions will not be able to come in because there's a very clear impact cost criteria.
Correct.
And if you have so little of free float, and then you actually see the actual free float, as Mr. Gupta was mentioning, the stock gets cornered by known hands and informed hands, and then there is hardly any free float available for mutual funds. The impact cost is too high. Right. The fund manager will not get compliance approvals.
Mr. Gupta wants to come in on that. Mr. Gupta, you were saying?
See, again, I am saying the free float we define in terms of percentage or number of shares.
Which is already happening.
I always say percentage of shares have no meaning for me. Because if you have got a company which has a 10 crore market cap and is 25% or 30% free float, it's 1,000 into 30, 300 crore. If you have a company which has a 1 lakh market cap and it has a 5% free float, it has a 5,000 crore.
Correct.
So the issue is the balance has to be what are the number of shares which are in the market, what is their value, and how they are concentrated.
Right.
Now, say, for example, if 5% is there, look at the question of LIC.
Right.
LIC is only 5% or less than 5%.
Yes.
And it is concentrated with institutions.
Right. Mr. Bagga wants to counter on that. Mr. Bagga?
No, I agree with that, sir. But why have regulators globally put a 25% free float? There is science behind it. There is thinking behind it. Irrespective of the size, they prefer a 25%. That is the norm. If you look at the top 30, 40 exchanges around the world. So it is a norm that has come in. It's not meant, because see, I'll tell you very clearly, if I'm a big fund manager and I want a sizable position and I want to put in $200 million, I can't put in. That it becomes as simple as that. While if it's a 10 lakh crore share and it has a 40% free float, my impact cost goes down. I will not get compliance clearance only. That 2.5 will become an issue. It's not that simple, sir. And that's why everybody is going to 25%.
So 25% as a global standard, you're saying that what works globally perhaps may not be working over here. Mr. Gupta, what are you saying to that?
I'm again saying, Mr. Bagga has said that in America there is no concept of promoter. So everything is free float. In India, the issue is, again, I am saying, when a mutual fund or LIC or insurance company invest, they invest on the amount. Nobody says that I want to have a 5% pie in this company or 2% pie in this company. Now, my amount is so big. Say, for example, if a company which is a 10 lakh crore market cap,
yes,
I don't think LIC would want to own 10% of that because it will be 1 lakh crore.
Right.
So LIC will still want to have 10,000 crore, 5,000 crore. So again, I am saying it is the number of shares which are available and the market cap. It is nothing to do with percentage. The only thing to do with percentage is ensuring that special resolution passage is possible only with the support of public. Similarly, related party issue, similarly, protection of minority. We got to take care of all those issues from where the governance can be diluted. And if you handle that, there is no problem.
Mr. Solanki, in all of this, what do you say? Retail investors, should they be more cautious with IPOs after these rule changes come in, whenever they do, or is this still a growth story that they must participate in? What's your take overall?
Instead of being cautious, I think we should take it positively. And as far as IPOs are concerned, it is more of a valuation-driven investing exercise. So it doesn't matter what kind of a dilution which is happening, as far as it is happening at a decent valuation and there is ample growth opportunity. So with that happening, I think most of the companies IPOs would sail through. I do concur with one point Mr. Gupta made was regarding the protection of minority rights and how the MCA's circulars, etc., regarding a special resolution that would happen. So that is one of the area wherein I think a regulator must look at it. And I think apart from that, it's a exercise in progress. And I think as and when we develop experience and learning post this on norms, so then only I think regulator would be in a position to tweak it further if it sees so.
Right, fair enough.
Deciding on, yeah.
But Mr. Bagga, do you see these norms, since you're citing global standards as well, do you see the norms that are being proposed over here making India that much more attractive as an investment destination for global institutional investors who actually prefer larger, more liquid companies?
Yeah, but see, I never second guess the regulator. So they must have done a lot of data crunching and arrived at right now an optimum solution.
Okay.
I think it's a process, so regulation also evolves with time. This is solving for maybe some large IPOs, or it is solving for the present situation. Again, I'm saying if we have to reach the top 3 stock exchanges in the world to get our massive allocations on MSCI, FTSE kind of indices, we need free float.
Okay.
So that way, this is going to have a sword hanging on your stocks. Those promoters will need to keep on, and they will petition the regulator on various things. We have seen that on banks.
Yes.
So many bankers never gave up their stake. They would file cases even against RBI.
Very true.
So will continue to happen. Promoters, if it's doing very well, they will not let go that easily. That is the concern. So if you get them off running to start with, because there are not that many cases of 5 lakh crore companies coming. LIC is one case.
Yes. Hyundai, I mean, there will be quite a few, perhaps in times to come. But yes, as far as numbers go, you are going to have fewer over there. But Mr. Gupta had another point to make, and perhaps the last point, Mr. Gupta, because these IPO rule changes, do you see them widening the gap between those elite IPOs, the big unicorns, and the smaller companies? Or do you think that both can benefit from this kind of new framework, although you say that it has to be work in motion?
First of all, I would say, I do not believe or I do not want to follow what happens anywhere else. We are capable enough to become leaders in the world. And I give you an example that credit rating agencies were regulated in India first than anywhere else. So we can always show the world the path. That is one. The second thing is this, saying that it will become a market for elite listing or a smaller company will lose out is not a case. Every company which is worth it will get investor attention.
Okay.
If not at the IPO time, subsequent to IPO, or if at the IPO time if they get attention, but after IPO they may lose attention, everything will happen. It's a stock market is a place where you got to take risk. If you say that please remove the risk from the stock market, I would say please get removed from the stock market.
Oh Lord.
Risk cannot be removed.
All right, fair it is. I mean, SEBI's new IPO norms, you can't take away. I mean, there is a bold step that is being taken. Perhaps it will deepen India's capital markets. It could be a subtle tilt towards keeping founders in the driver's seat for a little longer. But for investors, the takeaway is clear. Less equity on offer means that investors will have to be sharper in assessing valuations, judging governance before they actually jump onto the IPO bandwagon. I want to thank my panel for joining us with their sharp takes tonight. Mr. Bagga, Mr. Gupta, Mr. Solanki, thank you indeed for those diverse insights.
Ajay, I'm meeting you after a long time. Okay.
Mr. Bagga, that was for you from Mr. Gupta. Perhaps we can have more of these discussions and we'll meet that much more often on The Big Question. But for all of us who are watching tonight, remember every IPO is sold with a story, but it's the investors' money on the line. And the real question is, are we buying growth or are we buying into hype? That's something we must always answer. I'm Vikram Oza. This is The Big Question. Stay with us on NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
You're tuned into Market Express with me, Shreyanshi Singh. Let's get straight to the show then. In fact, first things first, a quick look at what the markets then did. In fact, Indian markets kickstart the week on a volatile note with the Nifty ending a range-bound day of trade above that 25,000 level, as you can see on your screens as well. 30-pack Sensex is the one that traded flat with a negative bias, wrapping the day below those 82,000 levels as well. When you also take a look at broader markets, in fact, they outperformed the benchmarks, with the mid and small cap indices ending with gains of nearly 0.5% each. Jio Financial Services, Bajaj Finance as well as Eternal were among the top gainers within the Nifty 50 basket. But moving on then, let's also get your quick check going. As far as the sectoral picture then is concerned, concluded mixed for the day with Nifty Pharma, Healthcare and IT declining the most. Nifty Realty was in fact on the other hand the top gainer, buoyed by government's proposal of a 20-year tax holiday for data center builders, and we'll get you some more details throughout the course of the show on this one as well. The advanced decline ratio ended skewed in favor of the bulls with over 1,600 stocks settling in the green. So that largely is the kind of sectoral picture that you had coming in. But tell you what, let's also quickly start taking a look at some of those buzzers as well in trade. In fact, KRBL is the first one that makes it to our list. And you're talking about a leading player in the basmati rice market facing scrutiny after the resignation of one of its independent directors. And the company's independent director, Anil Kumar Chaudhary, is the one who's resigned, citing inconsistency, in fact, in the board dynamics. In fact, he's also highlighted that there are inconsistencies in recording of minutes of board and committee meetings. Also stated that prevailing dynamics of the board are inconsistent with the interest, in fact, of the shareholders. Stock, in fact, was down about 10% in trade. As you can see on your screens as well, 9.5% downtick is where the stock ended the trading session as well. But let's move on to another stock that is, in fact, buzzing in trade on the flip side. Nadanak is the one that we're talking about. It was up over 8% in trade, and that's after a bullish note coming in from DAM Capital. The brokerage, in fact, has initiated a buy rating on Nadanak, also citing a number of key growth drivers for the financial services company. Let's take a look at some of those growth drivers as well. The report, in fact, highlights several factors that it believes will propel Nadanak's performance in the coming years. So the brokerage, in fact, is particularly optimistic about the company's increasing focus on direct-to-consumer lending. That's one of the factors seen as a major positive for its business model. In fact, speaking of growth, DAM Capital also sees the company's asset quality improving and are also penciling in an earnings CAGR of 39%, and that's over financial year 26 to 27. So that's another stock for you to look at. But tell you what, let's keep it going with the healthcare sector. Yatharth Hospitals is one to look at. It's expanding its presence in North India with a strategic acquisition. The company, in fact, has announced that it will be acquiring a 100% stake in Shantived Hospitals in Agra, and this is going to be through an all-cash deal. Now, this acquisition itself is valued at 260 crore rupees. The move, in fact, is a key part of Yatharth Hospital's strategy to strengthen its footprint in Uttar Pradesh. Let's also quickly take a look at Shantived Hospital. Now, this is the one that is currently operating with a capacity of 150 beds. A key factor in this particular deal is its expandable capacity of up to 250 beds. So that's something that you're looking at for this particular hospital, which also provides the company with significant room for future growth in the region. And the deal, in fact, also reinforces the consolidation trend that we're seeing in the Indian healthcare industry as major players look to expand their regional reach as well. So that's one important note coming in, one important highlight coming in as far as Yatharth Hospitals is concerned. But speaking of notes, then let's move on. Let's also take a look at Goldman Sachs, because they've issued a fresh report when it comes to Havells. The Global Investment Bank, in fact, is maintaining its positive stance, reinforcing its buy rating on this particular counter. The firm has raised its price target for Havells to 1,720 rupees, which is a significant show of confidence driven by its belief that the company is well positioned to capitalize on a growth revival in the electrical and durable sector. However, the report does caution that the upcoming quarter, that is Q2, could be temporarily disrupted by uncertainties surrounding the implementation of GST. And despite the short-term hurdle, though, there is still silver lining, because Goldman Sachs is viewing any potential weakness in the share price as a compelling opportunity for investors to buy And the long-term outlook, in fact, remains strong for this one. Goldman Sachs also believes that a sustained revival in earnings growth can, in fact, lead to a re-rating of this particular counter, driving its valuations even higher. So that's an important update coming in as far as this brokerage note is concerned. But let's move on. Let's get your check going as far as Apollo Hospitals then is concerned. In fact, they've announced a major expansion of its oncology business. The company is setting up a new 100-bed oncology center in Gurugram, and this is a facility that is part of the second phase of a larger expansion which will see the establishment of a 500-bed hospital in the city. And this dedicated oncology center is a long-term project that you're looking at. You're looking at construction and completion that is expected over the next 4 years. So that's an important update coming in for Apollo Hospitals. The strategic move is part of Apollo's ambitious plan to double its oncology business to 5,000 crore rupees within the next 3 to 4 years. So those are some of the plans that they also have when it comes to this particular company. The expansion into Gurugram is going to be a key pillar in achieving this goal as the company looks to strengthen its presence in North India's growing healthcare market. So that's the overall outlook as well as far as Apollo Hospitals is concerned. But let's also shift our attention to the IT sector. That's the one to talk about on the back of a global brokerage firm, UBS, in fact, that has also initiated coverage on a bunch of counters. First things first, let's take a look at Persistent Systems taking a highly positive view on the company's prospects. You've got UBS talking about them and also initiating a buy rating on the stock, set a price target of 6,730 rupees. The brokerage, in fact, calls Persistent Systems the best placed among the mid-cap space, citing its robust financial performance as well as strategic position. The report, in fact, also highlights the company's strong execution on both top-line growth as well as margin expansion. So those are some of the key levers for growth that they're talking about. But the main bullish thesis from UBS centers on the company's readiness for the next big cycle. In fact, according to their Gen AI disruption framework, you've got Persistent Systems that is considered the best positioned to capitalize the opportunities presented in the generative AI wave. So that's quite the bullish note coming in. And speaking of bullish, let's also keep it going with the IT sector then. In fact, UBS has initiated coverage on Emphasis with a buy rating, and the move also comes as the brokerage sees a strong potential for a revenue growth recovery for the company following a period of multiple headwinds. So that's one important note, one important commentary coming in here. For several years, you do have Emphasis that in fact has contended with challenges stemming from its large client DXC technology, its subsidiary digital risk, as well as broader issues within specific verticals. However, UBS's report suggests that these headwinds in fact have largely subsided, paving the way for accelerated growth. So that's quite the bullish note coming in as far as this particular counter is concerned. But let's move on. Let's take a look at some of those railway counters as well, because they were in fact also abuzz in trade. The country is moving forward with a significant project to build new railway lines near its border with China and other neighboring countries in the northeast. In fact, this project, which has an estimated cost to the tune of about 30,000 crore rupees, involves the construction of 500 kilometers of new railway tracks. Now, this ambitious plan is not just about expanding connectivity. You're talking about a strategic move, in fact, to improve logistics, military readiness in these remote yet vital regions. And the government, in fact, aims to complete this project over the course of the next 4 years. This new railway network will also complement the extensive road infrastructure already developed in the region over the past decade, ensuring better civilian access and faster response times in case of emergencies or military operations. So that's an important one coming in, RailTel. And a bunch of those counters were in focus, and that's one important trigger for the railway pack. But from one trigger to another for this particular pack, then let's talk about order wins, because it's in fact order wins galore for a bunch of these railway counters. I'm talking about RailTel Corp and Jupiter Wagons in particular. RailTel Corporation has secured a new letter of award from the Bihar Education Project Council. The order is valued at 210 crore rupees, and it's for a project to supply digital infrastructure. Meanwhile, you're also looking at Jupiter Wagons, that's also in the news. A key arm of the company has also gotten a letter of award worth approximately 100 crore rupees thereabout. This new order adds to its already robust order book, which stood at over 5,900 crores as of June 2025. So that's the entire railway pack, in fact, that was in focus. And speaking of order wins, then let's move on. Let's take a look at another counter that was in focus. And I'm talking about Shakti Pumps. The company, in fact, has bagged a 347 crore rupees order, and this is for the supply and installation of over 12,000 solar pumps. This is the second tranche of a larger order under the Pradhan Mantri Kisan Urja Suraksha Evam Utthan Mahabhiyan. I'm talking about this B scheme in Maharashtra. And the program, in fact, aims to empower farmers by providing them with solar-powered irrigation solutions. The stock was buzzing away in trade with gains to the tune of about 3%. As you can see, closed the day with gains of about 4% as well. But let's move on. Let's also get your check going as far as Vedanta is concerned. In fact, Vedanta's power arm has signed a pact with SEPCO Electric Power Construction Corporation to resolve a long-running dispute. Now, the disagreement was related to the engineering, procurement and construction contracts for a thermal power project. And this is a major win coming in for the company because SEPCO, in fact, has agreed to withdraw its arbitration claims against the power business. These contractual and payment disputes had been a major bottleneck when it comes to this particular company as well, specifically blocking the demerger process in the past. With this key legal and financial hurdle now cleared, all attention is going to be on the final NCLT hearing scheduled for September 17th as well. So that's a date that you should be marking on your calendars as well. But let's move on. Let's also take a look at the Ministry of Electronics and Information Technology, or MeitY, that is circulating a draft of a new national data center policy. The draft proposes a substantial 20-year tax exemption for data center developers. This is a potential game changer for companies like Anant Raj, which are making significant investments in the sector. And the tax holiday is contingent on companies meeting specific targets on energy efficiency and capacity addition. The draft also includes a proposal, in fact, to allow GST input tax credit on capital assets used for data centers. This policy comes at a crucial time for Anant Raj, which has been facing delays in its data center projects in the National Capital Region due to pollution control regulations, as you can see on your screens as well. This is one stock that ended the day with gains of about 10%. So that's Anant Raj that I'm talking about. But let's move on. Let's get you the word going as far as brokerages are concerned, and let's get your verdict on a new cross-sector report that you had coming in from Jefferies on India's spirits industry. That was also an entire pack that was buzzing away in trade, painting a very bullish picture is what Jefferies was doing for the sector. In fact, the brokerage also believes that spirits category offers strong growth potential driven by premiumization. It projects also a double-digit top-line growth and a meaningful room as far as margin expansion is concerned. Across the board, let's also take a look at some of the counters that they've in fact talked about. Radico Khaitan is the one that is a top pick, with Jefferies in fact projecting a robust 35% EPS CAGR as well. The company is seen as a growth leader for United Spirits as well. Jefferies sees a favorable risk-reward scenario, and the stock's recent correction of over 20% has, according to the brokerage, already priced in near-term headwinds. The dark horse, though, in this particular space, according to them, is Allied Blenders. The brokerage, in fact, sees significant upside coming in for this one. So that's something that you should be marking in terms of what is being penciled in for this entire space. That's one space that was buzzing in trade. But speaking of buzzing, let's talk about Tata Technologies as well. The stock was a buzz in trade after announcing an acquisition that significantly boosts its global presence and capabilities. The company is acquiring a 100% stake in Germany-based company for an all-cash deal valued at about 75 million euros. And the acquisition is expected to be EPS accretive from the very first year itself, signaling a strong financial rationale for the deal. So that's the latest coming in as far as this particular counter is concerned. But since we're talking about this counter, let's also get you the brokerage verdict when it comes to Tata Tech. JP Morgan, in fact, has a bearish stance coming in on this counter, maintaining an underweight rating is what they're doing, with a price target of 570 rupees. This view, in fact, comes despite the recent acquisition of the German automotive ER&D company, like I mentioned, which the brokerage, in fact, acknowledges as a positive move. So that's the entire brokerage verdict coming in as well when it comes to this story. But let's move on. Let's get you some more inputs and some more news and updates. In fact, Vodafone Idea has moved the Supreme Court challenging additional AGR demands, seeking a waiver of 45,000 crore rupees from its total dues of over 83,000 crore rupees. The court will be hearing the plea on September 19th. So that is a date that you should be marking on your calendars. But Vodafone Idea, in fact, has asked the Department of Telecom to reconcile dues up to financial year 17 under the 2020 norms. And the case follows the 2019 ruling expanding AGR definitions and the 2020 order allowing telecom firms 10 years to clear over 93,000 crore rupees in dues. So that's an important update coming in. The government, in fact, now holds a major stake in the company after converting over 52,000 crore rupees of dues into equity. So that's Vodafone Idea that you should be looking at. But let's move on then. And onto some macroeconomic data then. In fact, India's wholesale price inflation rises to 0.52% in the month of August, marking a shift from a deflation of 0.58% in July and reaching a 4-month high is the milestone, in fact, that you're looking at. Primary articles inflation improves to a 2.1% decline from 4.95%, with food articles dropping 3.1% as well. So compared to 6.3% in the last month, vegetables deflation eases to 14.2% from nearly 29%, while fuel and power worsens to a 3.2% fall as well. Manufactured products, let's take a look at that as well, because there you have the inflation climbing to 2.55% from 2.05%, and food items in fact contribute 73 basis points to the uptick as core WPI also rises. ICRA forecasts WPI reaching about 0.9% in the month of September due to higher global crude and commodity prices. So those are some of the triggers that they're looking at. Plus a weaker rupee is also something that you should add to that list according to ICRA, though food may return to deflation, and that is the verdict coming in from them. But let's move on then. As per the Society of Indian Automobile Manufacturers, or SIAM, India's auto sector saw a significant boost in August, with passenger vehicles sales also reaching 322 lakh units. This marks a substantial increase from last year. In fact, two-wheeler sales also rose by 71%, with several manufacturers also reporting strong growth. In fact, the industry is optimistic when it comes to the festive season, expecting further sales momentum. So that is something that you should be penciling in when it comes to this particular sector. But tell you what, let's keep it going with the auto sector then. Maruti Suzuki's popular hatchback, the Swift, is getting cheaper by up to 1 lakh rupees. Let's take a look at the latest updates as far as this particular story is concerned, because thanks to the government's GST norm reform, you do have the new prices that will be effective from September 22nd, 2025, just in time for the festive season. The Swift's price drop, in fact, ranges from 55,000 to 1.06 lakh rupees, depending on the variant as well. Other Maruti Suzuki models like the Alto, K10, Espresso, Wagoner, Celerio, as well as Desire, Baleno, and Ignis are also seeing price drops ranging from 20,000 rupees to 85,000 rupees. So that's the latest coming in as far as the auto sector then is concerned. But from one sector to another then, let's move on to Indigo. Indigo, in fact, opens a new aviation corridor between India and Greece, launching 6 weekly direct flights to Athens starting early January 2026. And the airline introduces India's first aircraft, inducting it by the end of 2025 for this particular route. In fact, this move marks Indigo's expansion into Europe, connecting Indian travelers to Greece with enhanced long-range capabilities. And this particular aircraft that I'm talking about boosts efficiency and passenger comfort, strengthening Indigo's global footprint as well, while fostering tourism and trade ties with Greece. So that's some news, good news as far as travel then is concerned. So if you're planning a trip to Greece, this is also something that you should be looking at. And in terms of plans, then let's move on. Let's get you one more plan that you should be adding on your list. Today is the last date to file ITRs if you haven't already done so, for those not subject to audit, including salaried individuals and presumptive taxpayers. Taxpayers. In fact, the deadline set for September 15th was extended from July 31st after those changes in ITR forms. Missed filings are going to be drawing penalties, interest, and loss of some tax benefits as well. So that's an important update coming in. 5,000 rupees thereabout is the sort of tax that you can be hoping to pay if you do miss this particular deadline. So do keep in mind that this is a deadline that you should be marking on your calendars. But let's move on to some national news. Then the Supreme Court, in fact, has stayed key sections of the Waqf Amendment Act saying that some of its provisions could lead to arbitrary power. In fact, it paused the role of district collectors in deciding ownership disputes and struck down rules that limited the board to only people practicing Islam for 5 years. Other parts of the law remain in force, while petitions against it are heard. So that's the latest update coming in there as well, but let's move on. In fact, the Gujarat High Court has received another bomb threat, this time over email from an unidentified sender. Police quickly reached the spot and began their investigation. This is the fourth bomb scare at the High Court in just the past 3 months. So that's an important update coming in there. And speaking of important, let's take a look at an appointment. In fact, Acharya Devrat took oath as the governor of Maharashtra. He already serves as Gujarat governor and has been assigned this new role after C.P. Radhakrishnan stepped down to become India's vice president. The oath was administered in Sanskrit by the Bombay High Court Chief Justice as well at the Raj Bhavan. So that's an important update coming in, but let's also move on then. The Indian Navy, in fact, receives INS Androth, the second indigenously built anti-submarine warfare shallow water craft. This boosts our capabilities, in fact, against China's growing presence in the Indian Ocean. So that's an important update coming in. Garden Reach shipbuilders and engineers in Kolkata delivered the 77-meter vessel on September 13th, marking progress towards self-reliance in this particular space. The ship, named after Androth Island in Lakshadweep, strengthens anti-submarine and coastal surveillance with lightweight torpedoes as well, indigenous rockets and advanced sonar propelled by diesel engines and water jets. In fact, it also features over 80% indigenous content. So that's an important update coming in there. But tell you what, that's a wrap on Market Express. Thank you so much for tuning in.
Manpreet Gill, Chief Investment Officer of Africa, Middle East and Europe, Standard Chartered, joining us this morning. Manpreet, absolutely fantastic speaking with you. Thank you so much. It's always a pleasure. Just want to get the global view as far as India is concerned. It seems, and ironically I say, because in Mumbai the clouds are definitely not parting, but in terms of the overview for the Indian markets, consumption boost coming in, inflation numbers fairly benign, Fed set for another cut, and maybe Trump taking his gaze off India when it comes to tariffs. All roads are leading here.
Well, good morning. You're right. I think if I look at the various range of factors out there, I think in absolute terms, the picture is turning a little bit more positive. The question, of course, is in relative terms, where do Indian markets sit relative to the rest of Asia and EMs? And I think at this point, I'd focus a little bit more on the global drivers, because we're quite focused on the Fed decision ahead, because I think that's quite key to whether the recent optimism in sort of risky assets in equity markets around regions, whether that persists. And we do see a bit of a short-term risk of over-optimism in the short term, but also the dollar. And I think, we've always been of the view that a weak dollar would be positive for flows into emerging markets, including Indian equities. And I think the good news here is that we've seen, despite, short-lived upward pressures on the dollar, the default path has still been towards a weak dollar, which we think is a positive. So once you think about that global backdrop with, of course, what's happening domestically, we do think that does point to a slightly brighter picture ahead.
Okay. Manpreet, good morning. I mean, there is this whole interesting debate, and I'm just taking a leaf out of what you said, right? That people look at US exceptionalism for the last so many years, and particularly the last 2 years, and people thought, okay, 2025 will not turn out to be like that. It almost didn't until it has for now. And then people say that, okay, could a dollar demise and therefore a look out of America lead to the American markets underperforming? And voila, we already know that American markets are actually amongst the best performing markets for 2025 thus far, right? So does one take a bet preempting possible de-dollarization, or let it happen and then take a call? How does an investor behave? How does an advisor like you behave?
Well, I keep it simple and just try and take a cyclical view on the dollar, because to me, the big picture de-dollarization debate, that's a very long-term debate that will be with us for a long period of time. And this year, we've seen various periods where US equities have underperformed and then more recently outperformed global equities. To me, when you're trying to take a view on US versus say Indian or Asian or emerging market equities, I just say, look, are the cyclical factors for a weak dollar in place? Because regardless of what US equities do, as long as we get that weak dollar and potentially weaker dollar, if you start looking much longer out, which can happen due to a variety of reasons. It could be as simple as interest rates finally starting to come down the US and catch up with lower rates elsewhere. It could be just your relative earnings growth or valuations across asset classes. That to us is all that matters, and I think that's why we've taken relative overweights. I think in our global portfolios, the US is still obviously going to be a sizable asset class. We just want to take that extra tilt, we think, towards emerging markets, because looking through these periods of under and outperformance, we still think long term that trend will still be for US underperformance. Now, short term cyclicals matter. If I look at Asian emerging markets today, actually there's quite a lot of that optimism baked in, and to your point, the US has actually been outperforming recently, so we could see a bit of a challenge over the next month or two, and that's why we're so focused on the Fed and market positioning going into that. But to us, long-term investors, it's about looking through that and saying, will the dollar stay weak or get weaker? We think yes, and that's enough for us.
Right. Manpreet, this is Harsh also joining in. I'm curious to know, and bringing the subject back home, we've seen so many measures taken by the government to boost growth, and India is a growth market. This slowdown in growth likely also one of the factors that's weighing on markets in India, and a large contributor to that is FIIs. Does the FII picture change or the viewpoint change as a result of all of these measures that the government has taken, both on growth as well as on Indian markets?
Well, if you look at the cross-section of views out there, the answer would be yes. I mean, if you think about, a cross-section of FII views around the market going back 6-9 months, you could see quite a few, very vocal sort of pessimists. I think today we've seen less of that. But I think it'll always be a combination of the two factors. I think it's about the absolute story to say, look, are those sort of policy stimulus measures likely to pay off? I think the fact that we've got quite a few already, means that we've gone through a period of fairly subdued earnings, means the outlook starts to look a little bit better. Of course, we'd all be happier with slightly more inexpensive valuations. And then there's a relative picture, right? To more of those FI flows in relative terms flow to India or elsewhere in Asia. So there are two-step sort of process there.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Benchmarks end lower after a choppy day of trade, with Nifty snapping its 8-day gaining streak and Sensex closing below 81,900. Nifty Realty finishes as the top sectoral gainer. Mid and small cap indices outperform Nifty and the Sensex. USA's chief negotiator and the team will land in India tonight for trade talks, says Special Secretary Rajesh Agarwal, adding that the talks will continue tomorrow with discussions on several trade issues. The US is India's top export destination between April and August 2025 amid tariff-related uncertainty, with exports of over $40 billion as India's trade deficit modestly falls to $26.5 billion in August.
आज यहां बिहार के विकास के लिए करीब 40,000 करोड़ रुपया की परियोजनाओं का लोकार्पण और शिलान्यास हुआ है.
Prime Minister Narendra Modi inaugurates development projects worth 40,000 crore in coal-bound Bihar. These initiatives include infrastructure, power, irrigation and transport. Projects are aimed at driving growth and fulfilling the aspirations of the Seemanchal region. Food delivery platform Swiggy pilots Toying as a standalone app in Pune for value-conscious customers. Users ordering via this app have to drastically pay a lower price than they would if they ordered on the Swiggy app. It's the last day to file your income tax returns for FY25. We tell you what happens if you don't file them today. The first image of Gaganpreet Makkar, the driver of the BMW involved in a crash that killed Senior Finance Ministry official Navjot Singh, surfaces. Investigations reveal the driver took the injured victims to a hospital far from the accident site, raising questions about the delay in critical medical care. And the Supreme Court puts on hold key parts of the Waqf Amendment Act, including the rule that a person must have practiced Islam for 5 years before creating a Waqf. The court said other sections of the law do not need to be stopped and can continue for now. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's start off with our top focus this evening. Later tonight, the negotiators from the United States are going to be landing as India and US trade talks are set to resume tomorrow. As Special Secretary and Chief Negotiator Rajesh Agarwal confirmed the arrival of the US team and lead negotiator in New Delhi tonight. The discussions are expected to focus on a balanced bilateral agreement with key issues like market access and tariffs in the spotlight after a period of stalled negotiations. Rishabh Bhatnagar sends us this report.
The most crucial update with regards to India's trade scenario is, of course, with regards to the bilateral trade agreement between India and the US. The latest update that we have is the fact that a US team of negotiators led by the chief negotiator, Brendan Lynch, is set to land in New Delhi as soon as tonight. And both sides, US and India, will have another round of in-person negotiations for the bilateral trade agreement starting tomorrow. So far, what we know is the fact that this will last for at least a day, and after that there will be some sort of more build up on what direction these talks are headed in. Remember the deadline for both leaders, and both leaders that set the deadline for the first tranche of this bilateral trade agreement was the fall deadline. That means around the November mark is when we expect the first tranche to take place. What we know is the fact that discussions at various levels, including the diplomatic level, the political level, at the chief negotiator level, at the secretary level, all those discussions have been ongoing, and now we're finally seeing an in-person round take place. What we're seeing is that several trade issues will be related. That is what we've picked up so far.
Right, Rishabh, thanks so much for that. We'll continue tracking this development very closely. I also have Jayant Dasgupta, former Indian ambassador, WTO, now joining us live. Good evening, Ambassador. Welcome to NDTV Profit. We're looking at the US recently confirming, actually today, India as the top export destination from April to August this year. Now, looking at this and looking at the negotiation talks set to resume, how does this strong trade data influence India's negotiation strategy in these resumed talks?
I think the reason why April to August figures are very promising is the fact that there was an apprehension in the trade that some kind of tariffs would be there, which would be higher than the 10% baseline tariffs which were imposed around the 7th of April 2025 by the Trump administration. So this is the bunching up effect. And if you look at the overall US imports from various countries, not only India, you will see that the imports have been more than usual if you compare the imports with last year's imports, 2024 imports. So this is just a bunching up effect to my mind. And now that the tariffs have been imposed with effect from 25% first and then 25% again with effect from the 27th of August 2025, the imports have tapered off in terms of the US. And so we will see a slump in our exports to the US. So this is, I think, this was very much expected. And the trade talks are going on. Today evening, the Americans will land. So let us see how the talks proceed.
So, you know, India is also negotiating a crucial free trade agreement with the EU. How do these parallel talks with the US and the EU complement each other in advancing India's trade and economic goals?
The trade agreement with the European Union was initiated way back in 2006. And then the negotiations commenced in 2007. And of course, from 2013 onwards, I think there was a hiatus of about 7 years when no negotiations took place. So it has been long pending, and there were some tough issues which needed to be resolved. But I understand that most of the issues have been resolved, and some of the issues on which a resolution couldn't be found, I think both the sides have realized that rather than waiting, for a few more years to get them resolved, it is better to sign an agreement now and then, try to improve upon the agreement through resolution of the other differences. So I think this is something which is most likely the India-EU BTIA or the FTA will most likely be concluded. As the minister was mentioning the other day, about 60 to 65% of the chapters or the texts have also been accepted and frozen. So there aren't too many issues, I think, which are left. And they will, and in Brussels, I think from the 6th to the 10th of October, the next round of the 14th round of negotiations will take place. So I think this is well on the way to reaching a conclusion before the close of this year, and it will provide compensation to a great extent to the loss of the US market for India as well as for the EU. Of course, it will not fully compensate because for both the EU as well as India, the US is the largest export destination.
Absolutely.
So,
Jayant Dasgupta, former Indian ambassador, WTO, thank you so much for your time. Let's remember, this is, of course, as the negotiating team will be landing tonight. And, of course, very, very pertinent and upon India to maintain the strong